AI, there's a big opportunity around personalized AI. The opportunity for Apple is much bigger than any sort of nuance around memory costs.
Now that Apple has clearance in China for AI, Gene, will we see a bump higher in that market? There's a Reuters report this morning that Apple's working right now to integrate Qwen into their Macs.
Yeah, you idiots. Why you downgraded
That's
it?
the big X factor in terms of getting this personalized AI outside of the U.S. And you're picking up on a sensitive topic.
AI,
to the
CapEx, blah, blah. Opportunity, Apple.
Siri. And that sensitive topic is that it's only about 40% of their revenue is going to benefit from these new tools that are available in the new beta. Europe still has not approved it. China hasn't approved it. If they can work with some of these third-party models, that could get us closer there. So all the goodness around the personalized AI, it is somewhat diluted regarding the timing of all this. As far as when we're going to see some of that in China, my guess is we're probably still a year or two away from really full personalized AI integration within Apple AI devices in China.
Hey, Gene, I wanted to ask you about Google. We're going to be talking to Vinod Khosla in the 8 o'clock hour. He's helping back Jeff Dean's new company. Of course, there's a whole number of people who are effectively leaving Google or stepping back, including Demis. Curious what you make of that and what your reaction in terms of the way the stock should perform in terms of where they are in the AI race.
Well, this one has been it's a dynamic topic. I pause because there's a lot of forces that we think about here. Brain drain is critical. I mean, this is something that we can't just look past the headlines. If you look at Google, we've had, by my measure, about 6 major departures over the last 3 months. And it's easy when you look at the impressive numbers in June and look at what search was and look at GPC growth, 62% or 82%. The expectation was for 62. All that goodness, I think, kind of hides what is going on underneath the surface at Google, and that is brain drain. And we're starting to see it in the models and these rankings. We're starting to see it in the progress relative to the progress that GPT has made. You're starting to see Gemini start to slip on those leadership boards. And so, Andrew, I think that this is a really big deal. I think that brain drain is and brain gain is one of the critical kind of things to look at below the surface. And all I can say is that what's going on Google is not a positive developing trend. And I don't know if there's a good explanation that they can give that are going to make investors feel comfortable about the progress.
Let me ask you this. So one of the arguments that they would give is that they're halfway through whatever the next big model development is. That there's work to be done while they're developing and training that model, but to some degree, a lot of it gets baked in early. So if they're halfway through, it means that the former team, at least, clearly was working on whatever this new model is. I guess the bigger question is whether you think they have the talent to create the next model.
Exactly.
Or the next model is maybe what we're really talking about.
The next model. I talk about these 6 departures. They got tens of thousands of engineers. They have probably 500 key AI engineers. Why does 6? Why am I focused on these 6? Is because it's a culture, and this has been kind of highlighted by some of the recent departures at Google. It's about a culture of innovation around AI and all the subsequent hires that these critical people can bring. And so, but to your point about the next model and the next model, if we look at that scorecard, is what we're seeing with Grok has made a lot of improvements. We're at 4.5, 4.6, and 7 come out over the next couple months. For 5.0 out supposedly at the end of this year is going to be trained on all the SpaceX engineer data. I bet you're going to see Grok in the top 3 models. It's never kind of broken into that top 3. It tends to be 5 or 6. That's important, that kind of 2 or 3 miles down the road. My sense is Gemini is going to slip a little bit over that. And that, of course, is what investors want to always focus on. What's going to happen in the next 6 to 12 months.
Okay. Gene, want to thank you.
Thank you.
Appreciate it. It is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Melissa Lee. Joe and Becky are off today. Take a look at this Squawk Planner. Got a lot going on this week. We're going to get key inflation data on consumer and producer prices. Also, the latest government retail sales numbers. It's a relatively slow week for earnings, with just a few notable names. We'll hear from CoreWeave. That's an important one, given everything going on in the AI complex, Applied Materials, and Cisco.
News out from Facebook parent Meta. In just the last hour, CEO Mark Zuckerberg announcing the weights for an AI model called Muse Glimmer.
So today, I am proud to share that we are open sourcing a new class of on-device models that we are calling Muse Glimmer. It's a 30 billion parameter dense model that runs on your laptop, and it's the highest performing model of its size.
Zuckerberg praising open source AI, calling it an important force for empowering people and preventing centralization. He's laying out his vision for AI in a new long-form piece titled "The Future is for Everyone: The Path to a Positive AI Future." Zuckerberg says he hopes invention rather than automation can serve as a primary purpose of AI, and that superintelligence is broadly distributed in order to empower everyday people. Meta also announcing a $1 billion fund aimed at investing in communities close to where the company operates data centers.
Meantime, Berkshire Hathaway's profit rising last quarter. Operating earnings climbed 16% year over year on strength in the firm's energy, railroad, and manufacturing businesses. Now, insurance was a weak spot. Underwriting earnings fell 13% from a year ago. And a key takeaway, Berkshire's CEO Greg Abel starting to put some cash amassed by Warren Buffett to work on both buybacks and stock purchases. Berkshire buying back about $4.5 billion of its own stock during the second quarter. That's up from about $235 million in the previous quarter.
Let's get a check on futures this morning, and the Dow looking to be down by about 121 points. The S&P looking to lose about 9. NASDAQ higher by 26 pre-market. Let's get to Dom Chu with a look at this morning's pre-market movers. Good morning, Dom.
Good morning, Melissa. Good morning, Andrew. Let's start off with a look at some of the crypto names in the ecosystem, including Coinbase, Strategy, Robinhood, Riot platforms, all up slightly after news from over the weekend that the Senate moved to advance a major crypto bill that would create a regulatory framework for the sector overall. A key procedural vote on that Clarity Act will take place when the Senate returns from its recess later on in mid-September. But Coinbase, Strategy, Robinhood, Riot platforms all up fractionally to roughly 1% or so keep an eye on those. Moving over now to shares of Palantir, which are now down maybe just about 1% or so following last week's massive rally from the blowout earnings report and guidance. That stock rose 10% on Friday alone and posted its best week since November 2024, up around 35% over the course of the last week. So Palantir giving some of those gains back in the pre-market trade today. And then finally, shares of Barrick Mining Corporation are falling roughly 5%, almost 6%, after results missed estimates due to rising production costs and retrospective tax penalties in Mali specifically. Still, it produced more gold than expected. The company also says it reached an agreement with Newmont that resolves outstanding disputes in their shared Nevada gold mines venture. Barrick down 5.75%. Newmont shares up about 1% in the pre-market trade. So that's the gold, crypto, and all the other stuff, Melissa, wrapped up into one. I'll send things back over to you guys.
Only the way you can do it. Dom, thanks. Not true.
Okay, we've got a news alert. A group of House Democrats calling for leaders of major AI firms to testify on Capitol Hill. Megan Casella joins us with the latest. Good morning.
Andrew, good morning. So that's right. This group of Democrats is calling for the leaders of OpenAI, Anthropic, and other major AI companies to testify on Capitol Hill. And this coming after a series of recent cyber breaches, which the lawmakers say, quote, have serious implications for American safety and security. So 19 House Democrats sent a letter to House Speaker Mike Johnson this morning asking him to immediately schedule a hearing with AI leaders. They say they want to see executives testify about what caused these recent security incidents, whether any failures or negligence at the companies led to them, and what sort of regulation could make sure they never happen again. OpenAI, Anthropic, Meta, as you guys know, they've all reported incidents in recent weeks of their models hacking other organizations. So the lawmakers in the letter described these as serious in and of themselves, but also potentially the canary in the coal mine, warning of much more serious problems if these models continue to advance without regulation. Now, guys, as you know, these Democrats don't have the power on their own to compel executives to testify, but the letter does sort of suggest at least some broadening interest within the party in trying to hold executives accountable and possibly trying to get some sort of comprehensive regulation off the ground. Andrew, back over to you.
Do you think they will testify?
It's a long shot at this point. Johnson has to agree, Republicans have to agree to schedule these hearings, but just the noise of it coming after these recent security incidents, it does make me wonder if we'll start to see more discussion about this, especially because clearly the news of the hacks isn't slowing down. It feels like we continue to see more of these. every week. So now there's this smaller effort, but will it start to generate more interest? Will any Republicans get on board? It's mostly progressive Democrats on this letter, but not entirely. There's some moderates in the party as well. So we'll see if it starts to spread further.
Okay. Megan, thank you. Appreciate it.
Coming up, we'll talk markets and the trading week ahead with the Wharton School's Jeremy Siegel. That's next. And later, White House economic advisor Kevin Hassett joins us live from Washington. Squawk Box will be right back. JP Morgan raising its S&P target for the year from 7,800 to 8,000, citing strong earnings and easing concerns about AI overspending by major firms. Joining us now, Jeremy Siegel, Professor Emeritus of Finance at the Wharton School. Professor Siegel, great to see you. Good morning.
Good morning, Melissa.
Is there anything about the composition of this rally that concerns you? You know, the fact that it's so AI reliant, the fact that the AI spend at this point is heavily financed, anything?
Well, let me tell you what I'm looking at. And, you know, the most important variable for the economy is really not inflation. It's not employment. It's wages after inflation. That's real purchasing power. And really the most disappointing data I saw on Friday was what wages were up. And they were only up 3.2%. Now, on Wednesday, we're going to get the CPI. That's expected to be up 3.4. So what does that mean? Workers are losing to inflation. Now, what's the biggest source of workers gaining to inflation? And that is productivity growth. And frankly, productivity growth in the last 3 quarters has been very disappointing. We need to ramp that up. And there are some positive signs for this quarter, but the last 3 quarters have been below the 15-year average. And that's one reason why I think a lot of the public is not happy with the economic performance, is they're not gaining on inflation. So what we have to see is that AI working to actually increase the real wages of the average person. I mean, I'm very interested. My good friend Kevin, I hear you're going to be interviewing him in a few minutes. I certainly want his take on that. But that's what we really see. We need to see in this economy, I think, to really turn it around and get people feeling good about the economic situation.
Do you think that we're in the sort of a handoff stage where we're spending on AI? AI is causing inflation in the economy, and workers are not yet benefiting from that. So we're in this transition period.
Well, a longer look. Now, GPT was introduced in November of 2022. The average productivity growth since then, so we get almost 4 years, has actually been 2.5%, and that's not bad, and that's better than the last 15 years. Now, it's not good as the golden years that we had, 1950s and 60s, when we had over 3%, but it is better. But we've fallen off of that in the last 3 quarters. Now, maybe it's the oil situation, maybe it's other situations, but we need to get back on track. Now, some of the good, one of the pieces of data that actually was promising is that even though we didn't get a lot of increase in employment for the month of July, GDP estimates are holding. In fact, the Atlanta Fed thinks it's going to be over 5%. I think that's too optimistic for the 3rd quarter. Goldman Sachs thinks it's going to be 2.6. But if it's going to be 3 or 3.5, without a lot of need for more workers and hours, that's going to boost productivity, that's going to boost real wages, and that's going to boost the entire economy. So I think we've had 3 quarters of us falling back. I'm looking for this next quarter to bring us back up, but I think that is really why a lot of people are just really not happy with the overall economic performance over the last 12 months.
To get at that affordability issue for workers, should the Fed hike rates? Should we have done that before the last meeting?
Oh boy, that's a difficult question. I do see a little bit of slowdown in money growth, which is something that concerns me in terms of inflation. I mean, the situation in Iran is the biggest one, and what's going on in oil. I mean, if oil stays where it is or goes down, honestly, it's going to be pretty hard, I think, for Warsh to increase, especially since I hear he has very frequent conversations with President Trump, and we're going to get some better news on the gasoline front and some of those other fronts coming forward. If things fall apart, if hostilities begin and we go back up, then it's a whole new situation. And of course, we have only 3 months until the midterm, so this is getting more and more compressed into what actually the public can see and what we can actually do.
It sounds like, if I just were listening to you speak, Professor Siegel, and I didn't know what the S&P 500 was doing right now, which is basically sitting close to record highs,
Yeah.
I wouldn't think that the pictures match up. So where do you stand on the markets, given all of what you said and the concerns you have about the economy?
Well, there's a number of things. First of all, the market is not Main Street. The market could do great, and the worker may not be doing so great. Profit margins are incredible, especially for the technology group. They're going up. The hyperscale spending is doing well. It's 40% of the S&P. So that can continue to do well. And as I said, I'm beginning to see signs of this 3rd quarter that might be spreading to other areas. My big hope is that the AI gains that we hear so much about and that we're using can filter down to the average company that can implement it and say, look, I can get better margins too. That hope is, I think, what is keeping the stock market up. I'm not pessimistic about that. I'm trying to kind of get a kind of reconciliation between the fact that we're, looking at wages not keeping up with inflation. We're getting that in 2 days, and yet the stock market is doing great, and AI is there. And how are we going to reconcile all these things together? And part of this is just a timing issue. And as I said, I see seeds of good hope, and that the third quarter might bring these two factors back into a reconciliation.
All right, Professor Siegel, always a pleasure. Thank you.
Thank you, Melissa.
Okay, coming up, we're going to talk AI with Sebastian Mallaby from Meta's new model, the competition with China, and of course, he is the author of the book about Demis at Google, and we're going to talk about what that all means. Later, VC founder Vinod Khosla will also join us on the latest investments, his family's deal to buy the Super Bowl championship team, the Seattle Seahawks, as well. Squawk Box coming right back after this. Welcome back to Squawk Box. Our next guest has some unique insights on the U.S.-China AI race and what he calls the summer of cyber hacks. He is the author of a great book about Demis at Google. We're going to talk about that as well. Sebastian Mallaby, he's a Paul Volcker Senior Fellow for International Economics with the Council on Foreign Relations. His book is called The Infinity Machine, and it is a biography of AI pioneer Demis Savas, who stepped... Well, I'll ask you, I'll start there, Sebastian. Did he step up or step down within Google? We were just having a conversation about the impact of all this may mean inside Alphabet.
Yeah, or did he step back or step sideways? I mean, there's all these different descriptions. I think he basically wanted to focus on the second part of his mission. The first part was always build the strong AI, and he's made enormous progress with that. And he says we're at the foothill of the singularity. In other words, AGI, artificial general intelligence, is just a matter of a year or two more. But what he's worried about is the other part of his mission, which is making it beneficial for humanity. And that's the bit that's really going badly. You know, you've got models breaking out of their sandboxes. You've got a lack of regulation. You've got a lack of dialogue with China, the other big producer of AI. And that's what he wants to focus on. So he stepped back from building the AI and is more focused now on two things: the policy and strategy around safety, and then secondly, trying to develop AI for medicine. And that's why he's retained the leadership of Isomorphic Labs, the London-based platform for AI.
You've been taking on, though, Sebastian, all sorts of comers on Twitter and elsewhere, I've noticed. Some of who put out reports suggesting he was going to try to leave the company on his own, but that they didn't want too many people to leave at one time, so then they made some kind of side deal with him. The big question, I think, is what's really happening inside Google, and how big a deal is this? How important is this when some of the talent has already left the building and others may be moving into other places?
Yeah, I think people jumped on Demis Hassabis' announcement and sort of, said, "Oh, this is just the latest in a whole range of, senior scientists, famous scientists quitting, either to do startups or to join the competition." And by the way, their model, which was the best model in the world end of last year, is now barely in the top 10, the Gemini model. So these are true things, right? The scientists did leave, and the model is less competitive than it was. And so it's very easy to kind of paint a picture of a general crisis. But that's not the sense I get from speaking to Google executives, because although the model is behind and they want to catch up and they take that seriously, the monetization of the model is doing extremely well. It's on Android phones, it's on iPhones, because Gemini powers the Siri Apple intelligence. It's huge on search if you use AI overviews or AI mode. It's got 950 million plus users just on the Gemini app. And they're coining it in terms of deployment of AI. So I think there's a sense of crisis. And although some famous people have left Google, it's a big team. It's like several thousand people on the Gemini team if you count everybody. And so we shouldn't over-index on a few famous names.
Okay, let's talk about your latest piece, because you also take on all comers on these cyber attacks, which we've seen. And I think you have a pretty provocative view, which is that maybe this is not these models gone wild, but actually humans that made some mistakes.
Yeah, so I went down the rabbit hole so others wouldn't have to. But when you look at the 5 announcements that have happened in the last 3 weeks, about models escaping from their sandbox or doing something weird and attacking cybersecurity. 3 out of 5 of these problems were basically because the training environment, the sandbox, which was supposed to be secure and isolated from the internet, it wasn't configured properly by the human users, and therefore it was easy for the model to get out. So I'd say 3 out of 5, simple human error. If we address that more aggressively, we'd be fine. The other 2,
is 3 out of 5 enough, though?
No, no, it's not. I think it's good to say that don't totally panic. There is stuff we can do quite easily to make this happen less often. But the other 2, which involved the 2 OpenAI models hacking into Hugging Face, that was genuinely alarming, because there wasn't a misconfiguration of the sandbox. Instead, the model twice discovered 0-day vulnerabilities that allowed it to hack out. They found one. The OpenAI engineers saw what was happening, patched the leak, thought it was all good. They also took down a message board, which unbelievably the different AI agents were using to coordinate their attack together. So you've got this kind of coordination and teamwork now going on between AI agents. And so the OpenAI authorities shut all that down. They thought they were fine, and like 4 days later, the escape starts up again, and that's when the model gets out and they start attacking Hugging Face. So that really is genuinely scary.
So, now there's Congress and other members of the world saying, look, we need to have an off switch for all this, a kill switch. We should be regulating these things. Some people have called for an FDA kind of approach where every model would go to a group. Some people have argued that group should be government people. Some people have said it should be private-public partnership. Elon Musk has said it actually should be a private partnership where it effectively goes to the rivals for a week. What do you think the right answer is?
So I think that the compromise solution of the self-regulatory agency is the right one to go for, because if you go for a pure government solution, we all know that Congress won't appropriate enough money to hire the best scientists to actually make that institution work. So I think a self-regulatory body where it's funded by the industry but kind of has the imprimatur of the government behind it is the right practical way to go forward. And that is the idea contained in the open letter from Demis Hassabis from like 3 weeks ago.
Sebastian, we got to leave it there. We very much appreciate it. Infinity Machines, great book. Thank you for joining us. We'll talk to you soon.
Great to be with you.
Coming up, White House Economic Advisor Kevin Hassett on the July jobs report, the latest inflation data, and much more. And later, Take-Two Interactive CEO Strauss Zelnick will join us to talk earnings and the latest pre-order numbers for the long-awaited Grand Theft Auto 6. Swap Box, be right back.
HHS Secretary Robert F. Kennedy Jr. will announce a plan today to change a decades-old loophole that has allowed food companies to use certain chemicals in their products without notifying federal regulators. That's according to a new report in the Washington Post. That practice, known as generally recognized as safe, it allows companies to self-certify the safety of certain food chemicals or substances. Those chemicals include preservatives in some breakfast cereals, emulsifiers in some ice cream and salad dressings, and some low-calorie sweeteners found in sugar-free desserts and candy.
In other food safety news, Taylor Farm says it is recalling prepared food items containing jalapenos over concerns about potential salmonella contamination. This coming just a few weeks after another voluntary recall for lettuce tied to the Cyclospora parasite. The items being removed from store shelves include salsa, and guacamole. Coming up, White House Economic Advisor Kevin Hassett will join us to talk jobs, inflation, and a whole lot more. Squawk Box will be right back.
As our country celebrates its 250th anniversary, CNBC spotlights the leaders driving business and the nation forward.
America's superpower is creativity. The ability to come up with new ideas, the ability to express those ideas, and the ability to bring together people as one community through creativity. I think that's America's superpower. I'm Anil Chakravarti. I run the enterprise business here at Adobe. When I think of America as the land of opportunity for me personally, I am very grateful to America for all the experiences and success I've had and my family has had. I came from India when I was 21 years old. I had the privilege of going to MIT as a master's and then a PhD student. America has been very kind to me. I went from being an aspiring scientist to an aspiring businessman. And you know, only in America, you can go from doing one thing to saying, no, I want to do something else. And you know what? The country always gives you a chance. America's success over the last 250 years, one has been around the values of the founding of the Republic. Liberty for all, the continuation of democracy and making sure that the expansion of rights to everybody. You know, it has taken through its own twists and turns, through the Civil War and through many other historical events to get there. But those values have really sustained the growth of America. Then you go back to creativity and innovation. Those have been critical to powering America's economy and society. To me, the American dream is the ability for anybody to build their own career, to build their own family, and build their own community. As long as you are putting your best foot forward and you are not taking anything for granted, you will have a tremendous amount of opportunities.
Jobs data for July came in weaker than expected. Joining us now with that, the numbers mean for workers and where the economy is headed right now, White House National Economic Council Director Kevin Hassett. Kevin, great to see you. Thanks for joining us.
Good morning, guys.
You think this data points to a very, very strong economy. Do you think that a Fed rate hike should be on the table for the next meeting?
Right. Well, first of all, with respect to the jobs number, as you mentioned, it was negative, but there were a couple of special factors. The consensus was it would be plus 88,000, which I think is consistent with everything else we've seen, which means it's a pretty strong economy. And the reason it got negative was there was a big decline in government workers and people who were leaving hospitality because of the World Cup. And so if you think it's an 88,000 number, then you'd have to say that all the other signals like booming investment, booming wages, incredible factory construction, 85,000 construction workers now building factories when it was about zero when President Trump took office. All of that says really strong economy. But if I were at the Fed, we respect they're independent. I respect they're going to look at the data and do what they think is right. That this is all supply side stuff, which should increase supply, put downward pressure on prices. It's not a Phillips curve kind of thing where there's government throwing money at things and that's creating jobs. And so if I were at the Fed right now, I would either hold steady or cut rates because there's so much supply side momentum.
Is there not an inflation problem, Kevin, in your view? I mean, Fed Chair Warsh has repeatedly saying that the Fed is committed to getting the target rate to 2%. We've been well above 2% for quite some time. Is there no inflation problem in the economy?
Well, if you look at the last two prints, they were fantastic, right? Like, so we had a negative CPI top line and the CPI core was zero. We had a negative PCE top line and the core was negative, and that's because not only did energy prices come down, like heck, even right now WTI is only 79 a barrel, but also so many other things that we've been doing, like reducing drug prices, helping reduce grocery prices by opening the border for beef imports and so on. All that kind of stuff, I think, creates momentum. But again, I was trained by Alan Greenspan at the Fed, and one of the things that he always said is that it's like moving the Queen Mary, and what you really need to do is have a lot of perspective on what's going on. And so if I were going to make any move going forward, I'd want to see more months like the months we've just seen.
Sure, and I guess those are month-on-month numbers that you're citing for
that's
the
correct.
headlines.
That's correct.
Because the core year-on-year is 2.6%, and if you look at it that way, and I guess it's all matter how you look at the data, you could say that you could make the case that that shows that there's persistent underlying inflation. And for the average American out there, I mean, polling indicates that they feel an inflation problem, that they are feeling the costs go up in housing and medical expenses, dining out in the last CPI report. I mean, how do you address that? I mean, you can point to all the numbers you want in the economic data. I don't know if it's a perception problem, but that's what they're feeling out there.
Right. Well, absolutely. We understand what people are feeling, and in part, it came about because of the runaway inflation under Joe Biden. Inflation has decelerated a lot, but it's still. If you look at the latest numbers, we're back where we want it. If you look at the 12-month number, we've still got some progress to make. But again, I want to highlight the difference between demand and supply side. So there was a lot of job creation under Joe Biden, but a huge chunk of it was an increase in government workers. The number of federal government workers rose to 3 million, the highest on record by the time President Trump took office. We've cut that by 10% already, but when you hire all these government workers and pay them salaries and ask them to do whatever it is they're doing, then that's a demand-side stimulus, the kind of thing that causes inflation, and the Fed should hike rates around rather than cut rates the way they did. Right now what we're doing is supply-side stuff, so it doesn't have nearly the inflationary effect.
Kevin, can you weigh in on the big AI jobs debate? We've been having a lot of conversation about that over the past week. I was at this Aspen Economic Group meeting, and that was the conversation. Just this morning, Meta announcing a plan to $1 billion fund effectively to pay firemen and policemen in communities where data centers are going up. Obviously, there's states now that are pushing back, Texas, for example, New York. What do you think is happening in the moment, and what do you think the world looks like a year or two from now?
Yeah, I really feel bad for you, Andrew, going to the combat duty of going to Aspen in the summer, right? It must have been terrible. But the bottom line is the AI debate is underway, and it's really awesome to see that our thought leaders like Mark Zuckerberg are putting the pen down to paper, and Mark's treatise is like more than 6,000 words. And I think that really, really carefully thinking through what it means is a very, very, probably perhaps the most important policy issue over the next couple of years. Right now, I would divide it up into two main categories. The first category is what's going to happen to people's jobs. And so far, the data is quite positive because AI has gone into companies that didn't have AI, made them way more productive, increased their sales, increased their employment. It's taken away some jobs for computer programmers, but for the most part, the net job number is positive. And then the other thing is, what about cybersecurity? You know, I think that American people are anxious about these stories that, like, the AIs are getting out and starting to break into systems that they shouldn't have been able to do. And I think both of those are policy challenges that the Trump administration is very, very carefully studying. We've got our best people on it, and I think if we can keep the security issues under control, then we can focus on what happens to jobs and what we need to do to retrain people should they find that their job is under threat.
The other big question I wanted to ask you about this morning is the news around Lisa Cook, the effort by the White House potentially to remove her, and how you think about the independence of the Fed in this context. We were talking about, you know, the way Jay Powell has approached this, the way Kevin Warsh may approach this. By the way, I don't know if you think if Lisa Cook does get removed, whether you ultimately could get that job.
No, I promise you that's not going to happen. But, you know, I think it's a law enforcement matter. I look forward to seeing, if you look at the Supreme Court ruling, it said that basically she was given insufficient notice. And so now she's been given notice. I look forward to seeing what she has to say. She says that she's 100% innocent. You know, as a human being, I hope that's true. But I think that if in the end there is a cause, then of course the president has the right to fire her. Whether there is or not, that's a law enforcement matter. Now I'm an economist. I can't add anything to it right now.
Can you understand, though, Kevin, the concerns about surrounding Fed credibility and the president wanting to remove Lisa Cook on the heels of these reports that he and Kevin Warsh have had several meetings together?
Well, the president and Kevin Warsh have been talking together for 20 years. I've been friends with both of them for a very long time. The president trusts his judgment. Kevin is the new chair. He's got some members that agree with him on everything, perhaps, and some that don't, and they have lively debates, and that's the way the Fed is supposed to be. Kevin Warsh is as independent as it comes. If the president were to tell him to do something, he wouldn't do it, but he would argue about why he's not doing it if he thought it was the wrong thing to do. And so I think that those conversations are productive. You know, I think that Kevin Warsh has conversations with the Treasury Secretary and with me, and that's so that we all have an understanding about what's going on in the economy that's consistent across agencies. And so, yeah, I think that in the end we'll have to see, this is a law enforcement matter, how it turns out. But, you know, again, on the human dimension, I hope she is innocent.
And then the last question I had for you, Kevin, relates actually to the intervention on the yen last week. We had an opportunity to speak with the Treasury Secretary, but there's been a lot of conversation and consternation in the aftermath of it because apparently we were selling, meaning the U.S. was selling euros to fund effectively the bailout of the yen, and apparently that took place without a conversation prior with Christine Lagarde and the Europeans, who I think were quite shocked and surprised by all of this.
Mm-hmm. Well, you know, that action is something that is the purview of the Treasury Secretary, and you know, we're not really supposed to talk about currencies unless he's doing the talking. And so I can say that we're there for our friends, Japanese or Europeans, when they need us, and that was really clearly signaled in our actions last week. But you'll have to talk to Scott about the choice of the euro versus the dollar.
You may give me the same answer about this question, Kevin, but I'll ask it anyway.
Okay.
and that is that, you know, the notion that there was a, you know, we want to be a friend to allies, of course, but there is also another motive, and that would be maintaining the rise in yields, preventing the Japanese from selling U.S. Treasuries. Does that enter the fray at all? I mean, is that part of the conversation that, right, you know, we were at the moment in time seeing rising yields on the 10-year, and we wanted Japan not to sell.
Mm-hmm. Right. Well, you know, I think that if you look at the currency problem that was going on in Japan, that one doesn't have to think about U.S. Treasury rates to imagine other things that could go wrong. Once Asian currencies start to go in the wrong direction, it could spread, it could be contagious, and President Trump and Secretary Bessent are just not going to let that happen. I don't think you need to concoct a theory about U.S. Treasuries to understand why it is sensible for there to be a stable yen.
Is there a level at which you watch and you say, you know what, things could go wrong? Because right now we're at 158. It doesn't look like the intervention lasted, the impact at least lasted too long.
You know, I think that once you understand that we're, you know, in for good, we're going to help our countries when they need us, that helps stabilize markets in the medium term. Markets tend to have their eyes on the horizon, and we've got our eyes on the horizon too.
Kevin, while we've been speaking, a headline's just crossed by a company that actually the taxpayers have a big stake in, which is Intel, which has just announced a plan to offer $15 billion in common stock offering to raise money. My question to you actually is, how long do you imagine that taxpayers and the government should or should not be invested in Intel? If you recall, when we bailed out, for example, General Motors, it was for a period of time, the banks similarly. This has been quite, by the way, an investment, meaning it has worked as an investment on behalf of the taxpayers. Sure. But the question then becomes, should you exit on behalf of the taxpayers?
You know, it gives me an opportunity to hit you with some of the best news that we've seen, which is there are now 7 million kids that have opened up Trump accounts, getting their $1,000 match from the government. Secretary Bezos thinks that number is going to be very soon up to around 70 million. And I think that to the extent that, and I'm not going to speak specifically about Intel, but to the extent that we have to come in and take an equity stake and help a company when it's on the ropes, that we have a natural way for it not to become like basically a company that's controlled by government, which is we'll have accounts that you can see that Michael Dell is putting money in accounts. We've got AI companies talking about perhaps putting money in people's Trump accounts. And so I think we've created a vehicle that can solve the problem. Whether that's what the president decides to do or not is an open question. But I think that in the end, the whole point of the Trump account, where people are basically right now investing in index funds, is we want every American to have capital, because if every American has capital, then every American understands the benefit of capitalism. And I think that putting an individual stock in there in the future is something that is definitely worth thinking about as well.
But on Intel itself, do you think that's something we should be remain in for years, for months? You know, we could clock right now a nice big gain and call it a day, or we could be in this for a decade. I don't know what the right answer is.
Yeah, I think that in the end, President Trump, who has an incredible track record of when to buy and sell things, is going to make that call. But I don't think that people think that this is going to be sort of a socialist takeover. And I know that people don't think it's a socialist takeover of the capital sector of the U.S. It's a time sort of like Japan, when we find a friend in need and then we step up to help them.
Kevin, always great to see you. Thank you.
Thanks, guys.
Kevin Hassett.
Okay, coming up, the CEO of Take-Two Interactive is going to join us as we approach the long-awaited release of Grand Theft Auto 6. I can tell you that the Sorkin boys are looking forward to this one. Squawk Box coming right back after this. Welcome back to Squawk So coming up, can you trust AI to help you with your tax questions? ProCap Financial has some test data from its AI product. We're going to bring you the details next. Welcome back to Squawk Box. Earlier this year, ProCap Financial acquired finance AI company Sylvia, and today the firm has revealed a report about Sylvia's performance on tax issues compared to frontier models. Joining us right now is Anthony Pompliano. He's the chairman and CEO of ProCap Financial. Should I be doing my taxes with AI, sir?
Well, look, there's basically two different approaches in AI. This has been a very hot debate that people are trying to figure out. One is the general purpose, which basically, think about your guys' job. If you went and found the most intelligent person in the world and you set them here in the seat, they probably could do a pretty good job, but they wouldn't be nearly as good as you guys. You guys understand, because you've done reps for years and years. You guys have an understanding of where the data is that you can go and retrieve to do your job every single day. And so the general purpose models are trying to be as smart as possible. We've made a very big bet in a different direction, which is specialized workflows, or kind of expertise. And so what today we're announcing is that Sylvia now is more accurate and more powerful as an AI product compared to all of the frontier models. Now, to me, the part that I think people should understand, these are trillion-dollar companies. They've been spending tens of billions of dollars a year trying to figure out how to be as smart as possible, and a very small team of engineers has been able to beat them when it comes to accuracy and tax. Now, the way we did it, I think, is actually the biggest ramification for the AI industry.
How'd you do it?
So what we did is we built a AI harness. Now, that's not the model. The harness is actually where a lot of the value is going to accrue in this industry going forward. The second piece of this is we then went and built data pipelines, proprietary data pipelines. What we essentially did is we went and got the federal tax code, the state tax code, and we made it very AI agent friendly. So it's really easy for humans to read, but if you do a web search for a very specific tax code, it's very hard to find that. So making it friendly for the agents is important. And then the third is we've got one of the largest proprietary data sets when it comes to wealthy people talking to LLMs about their personal finances. So when you start to orchestrate all of this together, what happens is you're basically building expertise in a very specific niche, which is better than the general purpose.
Let me break down the three things that you're doing a little bit differently. One is you talked about a harness,
Correct.
Which might be a euphemism for a better prompt than others.
Like a layer?
Think of this as, so I'll give you a great example. We also have something called a model router, right? And so if you are OpenAI or you're Anthropic, you will never build a model router which would allow someone to come to your product and then you would send them to your Anthropic, send them to OpenAI's model.
Right.
You're always going to just use your family of models.
Right.
Well, what happens in these application-specific products is we actually say, we want to send you to the best model regardless of who they are. A harness is very similar to that in that it is orchestrating across all of these different components, tool calling, models, proprietary data sets, etc. And so I think of the harness almost as like air traffic control.
Okay.
When you ask a question, you're not just hitting a model exclusively. You're also looking at, for example, in a tax question, hit the actual proprietary data pipeline and go look at the federal tax code before you do the web search.
Okay, so you're ingesting all of this different tax information that may or may not already be in some of the bigger models.
Correct. They definitely can get web search, but making it very specific and more accurate is the big.
And then the third piece you're saying is that you're looking at the tax record, or the tax prompts of LLMs that wealthy people are using?
So we have over $50 billion of assets on the platform. People are constantly talking to the LLM. And what we're able to do is we're able to create synthetic user profiles. We can basically say to the AI, look at everything that people are talking about, look at everything that people are doing in terms of like who they are and all that stuff, create synthetic user profiles. Now, the key to this whole eval is I think a lot of people are frankly going to be skeptical. How did this little team beat these really, really big teams at doing this? So what we're actually doing today is we're open sourcing the eval rubric. Most companies don't do this because they're worried about IP protection. But what we're actually releasing is we're saying, here is the results of the test, here are the questions that we use, and then here are the synthetic user profiles that we actually are using so that other people can go recreate the test and pressure test our
You're not looking at a corpus, for example, of tax filings themselves. So do you have a special sort of corpus, if you will,
some people
database of tax filings?
We do have a feature called Vault where people can upload documents, and some people do upload their tax returns and then begin talking to Sylvia about that. She's very good at parsing the PDFs and being able to extract information. One of the balances, and this is always data privacy, and so one, people can always opt out of having any of their data involved in any sort of training, which I think is an important part, and every product should do that. But the second thing is that we also try as hard as we can to use synthetic profiles or kind of mirror type profiles rather than actually training it on, Andrew Ross Sorkin. We want to be able to do this on lookalikes, and that makes it very accurate, but also still protects people's privacy.
How does your partnership with Kalshi fit in?
Yeah, so Kalshi is a data provider. We look for data from all kinds of different players. We think that the prediction market, specifically around economics, I am much less interested in sports or like betting on how long your guy's segment is or anything like that, right? But we think that the economic data points are a signal as to what is going on in the market. What do people believe is going to happen? And so when you're asking questions to Sylvia about finance, the whole key to it is whether you are asking about a very specific stock, whether you're asking about a prediction market, or whether you're asking about if the Fed raises interest rates in the next month, what's going to happen to my portfolio? You want as much data into the system because AI is very good at managing the complexity. And so something like Kalshi is somewhat of a unique data point. Not a lot of people yet are incorporating that. So we see that as being valuable.
The cost of using Sylvia is?
It's free to use up till some point. So we take it on the chin and we pay for your first usage of the product, and then it's $20 a month is the plan that most people are on. And look, I think that one of the most interesting data points when people ask me about, is this working? Do people want this? Almost 20% of our monthly active users are already paying members, and that's been in about 3 months or so since we turned on monetization. So what that tells me is we've got product market fit and that people want this, they're willing to pay for it, and now what we're coming out and showing is that we're actually more accurate when it comes to tax-related topics than frontier models with billions of dollars.
The Pomp, Anthony Pompliano, thank you.
Absolutely. Thank you, guys.
It is just past 8 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Melissa Lee. Among our top stories right now, a big one. Intel proposing a $15 billion common stock offering. It says it plans to use the proceeds for general corporate purposes, including capital expenditures and working capital. Intel says it continues to see strong demand, customer demand that is, driven by unprecedented investment in AI compute. Of course, the United States government, us the taxpayers, have a stake in Intel. Meantime, Meta's CEO Mark Zuckerberg announcing the weights for an AI model called Muse Glimmer, the $30 billion parameter dense model designed to be able to run on a consumer laptop. And President Trump saying he hopes to increase economic pressure on Iran. The president telling Axios the U.S. was, in his words, low-keying it with the country thus far. He said the U.S. was semi-negotiating with Iran and monitoring its inflation and economic problems. As of last week, we apparently had a deal on the Strait of Hormuz, so I don't know if we were only semi-negotiating.
Well, what I know is that oil's higher this morning.
That's what I...
GameStop CEO Ryan Cohen is said to be considering withdrawing his $56 billion bid for eBay. That is according to a Bloomberg report that says GameStop could instead propose a partnership to expand both companies' presence in trading cards and collectibles. The report says GameStop would seek board representation under such an agreement. As of July 15th, GameStop owned a 9.75% stake, and eBay shares of GameStop higher by 1.75%. Now to the latest read on the consumer and high gas prices from the CNBC NRF Retail Monitor. Senior economics reporter Steve Leisman joined us now with details. Good morning, Steve.
Hey, good morning, Melissa. Retail sales registering a modest but still healthy 0.3% gain in July, according to the CNBC NRF Retail Monitor. It was helped by a second month of tame gas prices, and it overcame a challenge from a new date for Amazon Prime Day. I'll go through that in a second. But the Retail Monitor, it's powered by real credit card spending data from Affinity Solutions, showing retail spending ex-auto and gas rising 0.3. That's down from 0.4%. It's also just about a tenth below the running average for the series, but still shows decent discretionary spending. Year over year, 5.1%, down from 9.4 the prior month. It takes out restaurants here, the core retail number, up 0.3, again, just down a tenth. And the year-over-year core declining to a 4.7% gain from 10.1. So Amazon moved its Prime Day from July to June. That heavily influenced the year-over-year rate and the monthly change. Reports did show those solid gains for Prime Day, and that led to some cooling this month, which is just natural. Here's the breakdown by sector. Digital products, always a perennial source of strength, up 1.2%. Health and personal care, 0.5. Clothing, accessories, these are sort of discretionary items. General merchandise up 0.5. Among the losers, though, buildings and garden materials down 0.2, perhaps a sign of weakness in the housing market. And sporting goods, hobby, and music stores down 0.5. That could just be a bounce back from the strong spending in June for Prime Day. Economists of the National Retail Federation commenting, supported by a low unemployment rate, steady wage gains, household remains budget conscious, but took full advantage of midsummer sales and early back-to-school promotions to stretch their dollars. Let's focus on gas station sales. They've been on a roller coaster ride since the Iran war began, surging in March, April, and May, but the increases ended in June and continued to be flat in July, still up 22% year over year, reflecting the extra about $1.10 or so that Americans are paying at the pump, according to AAA. These are interesting numbers for the Fed. Consumer spending has continued to be pretty strong despite the surge in gas prices, suggesting that the oil price shock did not have a measurable offset in demand for the economy as a whole, Melissa, but obviously for individuals, it can be more painful.
Can we go back to the gas spending chart, Steve? Because it was interesting to see that July was, what was it, negative or flat? I mean, this is summer driving season. Gas prices are, elevated compared to a year ago still, and yet there it is. It's 0.1% higher.
Yeah, that's reflecting, I think, the idea that gas prices rose to a level. That's what happens with those three bars there that are all up and up pretty strong on a month-to-month basis. And they continued at that level. So what probably happened, Melissa, is some of the seasonal adjustment takes out the price. And, it's interesting. If I could just go into the data weeds for a second, and I'll tell you why I'm doing this. Because Kevin Warsh, I think, very smartly wants to get into alternative data. And this is, I think at CNBC, we've been a pioneer of some of that alternative data. And this is one of those things, using our partners with Affinity and the National Retail Federation to give people an idea of what spending is like from real credit card data. But then something comes along and they move Prime Day from July to June, and it has an impact on the data. So it shows how you kind of have to move slowly and be very nimble. It's not a panacea. It's an excellent window into what may be happening more in real time in the economy. But there are challenges along the way when stuff comes along, the surging gas prices, a hurricane, this or that happens. Easter comes in a different month. So this data, it's very important, but we're just really at the early stages of learning how to use it.
All right, Steve, thank you. Steve Leisman.
Okay.
Pleasure.
Coming up, the CEO of Take-Two Interactive is going to join us next. We're going to talk earnings and pre-orders for the long-awaited Grand Theft Auto 6. And then later, we're going to talk to famed VC founder Vinod Khosla about his latest investments, AI, and so much more. Do not go anywhere. Squawk Box coming right back after this. Welcome back to Squawk Box. Take-Two Interactive reporting higher sales but widening losses for its first quarter. The big headline was strong pre-order sales for the long-awaited Grand Theft Auto 6. It is due out in November. I've already said the Sorkin boys are awaiting this maybe a little too much. Strauss Zelnick is here, CEO of Take-Two Interactive. Yeah, there's a lot of people who want this. And what are you seeing?
Nice to see really good. So obviously pre-orders have gone much better than expected. So our excitement continues to grow.
And you have to deliver, though. I mean, yes. I assume you think that you've nailed this thing, because this has been a long wait. Trust me, my children will tell you about the wait.
You know, we never claim victory before it occurs. Right. I know that our Rockstar Games division has tried to innovate and understands that as great as the anticipation is, we need to exceed expectations. I believe that we will.
How much do you think of this as a front-loaded? I was actually thinking about this over the weekend when I knew we were going to see you. How much of this is like a movie, like 50% of the sales of something like this happen in the first couple of weeks, and then it sort of it drifts off, or does it actually go the opposite way over time?
It really depends on the title. So in the case of Grand Theft Auto 5, it's continued to sell. We've sold 230 million units, and it's continued to perform through 3 console generations. So in that case, it was and remains the standard bearer, not just for our company, but also for the industry over 13 years. Now, of course, we could never project that to occur again. But that is an historical fact.
Go ahead.
You said that pre-orders have been unprecedented, but you don't know how it'll translate into sales.
You just, to the point Andrew just made, you just can't tell.
So people might not actually buy it in the
Oh,
end,
no,
or
I
they'll
think-
buy even more.
I think the odds are very high that the pre-orders turn into sales. I think, to Andrew's point, we can't tell if that's demand that was pulled forward because of initial excitement of the most avid consumers, or whether it reflects something very different. There's just no history from which to extrapolate.
Right.
How do you think about pricing for this particular title?
So we've established an $80 price point, a $100 price point for the regular edition and the premium edition, and I think most people felt that if we wanted to exert it, we had a great deal of pricing power. Our job, though, as we see it, is to deliver always way more value to the consumer than what we charge. And we want to do that over and over and over again. We understand that a consumer experiences the intersection of the thing itself and what you paid for it.
Right.
And so we want people to be thrilled, and we would never want people to feel like this is out of my range.
Are they pre-ordering the $99.99 one or the $79.99
Both.
one? Both. Okay.
Yes.
At equal.
Actually, it is skewing more to the premium edition, but that might be a reflection, again, of the fact that the most avid consumers are the ones who are pre-ordering.
What
now.
do you get in the $100 version that you don't get in the?
You get additional content.
And then the other question I had is, what kind of discounting you think is going to happen or not around Christmas? Because obviously this is coming out in November. Is there a shift in pricing as people get closer to Christmas? Or do you try to hold the price? How much of it is up to you versus retailers, et cetera?
Well, we obviously establish our pricing.
Right.
And then storefronts can do what they wish. We don't have any ability to control that. So if they reduce the price, they're obviously reducing their margin on the sale. There are situations where certain retailers will price down to drive demand for other things that they sell. And I can't tell what will happen. I will tell you that we preserved our pricing on Grand Theft Auto 5 for a very long time, much longer than a standard release of an entertainment property.
What's happened to the pricing of that product now?
Well, eventually it comes down over time, sure.
But how much does it come down?
Well, it depends. I mean, we've offered it for as low as, I think, $20.
Okay.
But it varies. There'll be promotions. But again, that's 13-year-old title. It's been in our catalog for a very long time.
Okay, so my other question is, given that so much of this company has become this one particular game, are you already on to the next version of it?
Oh, so let's be clear. In terms of the percentage of our revenue, all things Grand Theft Auto, the Grand Theft Auto franchise, for quite some time has been less than 15% of our total revenue. So we have a big, diversified company. We think we have the best collection of owned intellectual property in the business.
But one of the things that's been fascinating is the stock has almost like tracked what's going on with that game. Am I wrong?
I mean, I think
Were they
we're
excited
sort of
about that?
wrong in
Okay.
that we're a very profitable company, and I think we do trade on the fundamentals. I mean, I do think we trade on our earnings. This year, we expect to deliver over $1 billion of free cash flow. By the end of the fiscal, we expect to be a net cash company again. I mean, we're not a story stock.
Right.
We trade on the fundamentals.
No, I know, but if you follow all the headlines and what some of the investor class, they seem to be very tied up in the future of this game.
Absolutely, and I think, some expectations are very, very high, and I hope they come true. My point is that even in the event we have an extraordinary situation, something way outside of anyone's expectations, we still have an enormous business in mobile and console and PC outside of all things Grand Theft Auto. We've diversified the company meaningfully. We have 11 intellectual properties that have each sold over 5 million units in an initial release. We have an enormous, more than $3 billion top-line mobile business with enormous hits, and hopefully more coming.
And NBA 2K was a huge, was a big.
Well, NBA 2K
Sure.
set records this year with
Exactly.
12 million units sold in, and recurrent consumer spending was up 7% year over year.
I want to ask you about something that seems very different in terms of what you're doing with Netflix on August 27th. So it's GTA 6, an extended look. What is this going to, can you tell us a little bit about this? I mean, is this like an extended, is it a game trailer? Is it a movie? Is it a show? What
You
should
have
we
asked
expect?
all the think it will be answered on the 27th,
Oh,
and
come on,
I
Strauss,
expect
you're
you to
not
show
A little
up.
bit of a hint.
The hint is, I think it's really worth watching. It's really worth watching. And 6 hours after the initial premiere, it'll be on Rockstar's YouTube channels, and of course, it will make its way all over social media.
Can you pre-order through the?
I don't think you need to.
Okay, do you think,
just sign on
since
to
I think
Netflix.
of you as a media mogul, and when I first saw this, I thought to myself, do you think Netflix, is Netflix really going to get into the gaming business in a whole new way? They've already They're already a little bit in gaming. Could you see Netflix getting into gaming even more?
Look, they've hired some talented, experienced interactive entertainment executives, and we've made a bunch of deals with them. We've distributed many titles on the Netflix platform. And I think, I don't think it's any secret that their goal is to have as many subscribers as they can, and they want to deliver the best entertainment to those subscribers. So it stands to reason that they would make their way into the business. How do they do that?
Yeah, do you think they need to buy a company, like maybe a company called,
Take Two?
Take Two?
So you'll have to ask Ted and Greg, not me, about where they want to go with that. I think historically, Netflix has not made big acquisitions. They've grown organically, and they've done a great job at it. And as far as us, I don't know. I think we're very proud of the way we built this company independently. We're now the largest pure play that's public in the space worldwide. We expect to have over $8 billion in revenue this year. We generate profits year in, year out. I don't mean to imply that that's easy or even predictable. We have to get up every morning and do it. But I think if anyone deserves to be an independent company, we do.
Let me flip it around. And another sort of media mogul question for you. If David Ellison called you and said, look, I know you're in the gaming business. I got to stand up another film business. Like, I need another company. I got to sell some great IP to ameliorate these state AGs. Would you want to get into the film business?
I would sell you film business.
I know he'll sell you. Maybe he'll sell you Dune, some DC, DC characters, some other things like that.
Look, Andrew, I made a decision in 1993, before many of your viewers were alive, that it was time to exit the film business and go into what I believe would be the next huge entertainment business, the interactive entertainment business. Thankfully, it was a good career move. I was right, and that was a tiny little business in those days. Look, from my point of view, the motion picture business is a very difficult business economically. It's a wonderful business creatively. Now and then, selectively, we expect to bring our intellectual property to the motion picture and television business with other people's money, not our own, and I think that tells you how I feel about it.
Okay. Josh Selnick, it's great to see you this morning. Thank you for coming in. Appreciate it.
Coming up, news just out from Boeing. The company is selling 3 subsidiaries focused on urban air mobility in exchange for a stake in startup Archer Aviation. We'll hear from Archer's CEO after a quick break. And later, famed VC investor Vinod Khosla will join us on what he sees as the next big frontier in artificial intelligence. Squawk Box will be right back. Boeing unloading several operations in exchange for a stake in startup Archer Aviation. Phil LeBeau joins us now with a special guest. Phil.
Thank you very much, Melissa. Let's bring in Adam Goldstein, who is the CEO of Archer. Adam, this deal is essentially you acquiring three assets, three subsidiaries from Boeing: Wisk Aero, the eVTOL development at Boeing, as well as SkyGrid, which is an air traffic management subsidiary, and then there's In Situ, which makes high-altitude drones. How did this deal come together?
Well, the deal really came together because I have a great relationship with many of parties in the eVTOL industry, but specifically with Brian Yutko over at Boeing, who is the VP of product on the BCA side. He used to be the CEO of Wisk. They've been doing a lot of great developments over there and really pushing forward on the autonomous side of the capabilities, and that was an area that we were very interested in at Archer, and it really was a natural way for us to work together.
We should mention that Boeing is taking a stake in Archer in exchange for selling these three subsidiaries to you. When it comes to Wisk, you mentioned the autonomous aircraft development that they are working on. Is that an area of expertise that you were lacking in as you're developing Midnight and your other aircraft?
Well, Archer has two big core aircraft programs. We have the commercial product, which is Midnight, and then we also have our product that we're building alongside Anduril, which we call the Halo Thunder platform. The Halo Thunder platform is an autonomous platform. And so we are building that category, and that aircraft, because it has autonomy, is going to be built really with this new capability from the very beginning. Wisk has been building an autonomous platform from the beginning of their company. And so really by bringing these two companies together, Archer and Wisk, it gives us a capability to really balance both of our big aircraft platform on the commercial side as well as on the defense side.
SkyGrid is a subsidiary very few people have heard about outside of if you're really focused on what's happening at Boeing, but it's essentially an air traffic management service that they are developing, a software system for managing urban air taxis, drones that might be flying in a particular area, especially maybe delivery drones, etc. Is that an area, when you look at congestion, that really needs to be addressed before we see commercial aircraft and urban air taxis take off?
Well, air traffic control is something that I think the country has been very focused on, and really it's a global thing that the aviation industry has been focused on. How do we create an environment that can allow more aircraft to fly in the airspace? And there are products out there like SkyGrid that have been focusing on this. There is a period of time right now where there are new capabilities, the enhancements from AI, where we can actually have a dramatic impact. And Archer's been building its own foundation AI models that can also help this capabilities. So again, by bringing SkyGrid together with our new Z foundation model, it really gives us a chance to play in this space in a major way and have a big impact on the global airspace.
I want to show people some pictures of In Situ Scan Eagle, a high-altitude drone, which we were out at the facility in Oregon where they build and develop these more than a decade ago. The bottom line is this. They have a nice niche within the military drone portfolio, and this allows you to further extend your defense business, correct?
Yeah, it really does. From Archer's overall portfolio, we have the eVTOL business, we have the Big Thunder platform, and Archer really needs to get into the business of generating revenues and generating cash flows. And this is a business at In Situ that is very reputable. It's been around for over 20 years. It generates a lot of revenue. It generates cash flow. And there's a way for us to really add to our portfolio a new capability that we can leverage the VTOL technology that we're good at. We can bring in some of the new autonomy technology from the Wisk side, and we can put that all together to really help shape the future of ISR drones.
Quickly, Adam, how do you feel about the path to certification? Do you still believe that you'll have that happening with the FAA later this year, or is it more likely pushed into 2027?
Well, as I always say, my job is to build a safe aircraft, and the FAA will determine when we can get these aircrafts to market. So we have really been trying to rally the whole industry, the regulators, the operators, the ecosystem around the LA 28 Olympics. And so the EIPP program was designed to help put aircraft in the airspace this year. That will help get everybody comfortable that these aircraft, this category is safe, that this is a new capability that everybody can enjoy. And we're starting to really see that as many of my fellow other eVTOL companies are out there starting to launch these aircrafts. So I'm very hopeful that everybody will rally around this point. and that we can really start to see these aircraft come into the market as soon as possible.
But theoretically, I mean, for a long time, you guys and your competitors all said, hey, look, by the end of 26, we want to see commercial flights. Is the reality that we will not see commercial flights until well into 2027?
Well, the EIPP allows us to start flying in the general airspace. So Archer is focused on Texas, in Florida, in New York, in California. That's the start of all of this. And once we start flying there as not just a company, but as an industry, I think it really lowers the temperature and really shows everybody how safe these aircraft are across the whole industry. That is the key to certification. So that's what really 26 is going to be focused on. We'll certainly be focusing on that on 27. And then once everybody feels comfortable, we showcase that we can prove all the safety capabilities of these aircraft, they will then certify that. So we're hopeful that comes as soon as possible.
Adam Goldstein, the CEO of Archer. Thank you, Adam, for joining us today from the company's offices in Santa Clara on a day, guys, where Archer acquires 3 divisions of Boeing, and Boeing in exchange takes a stake, an undisclosed stake at this point. We'll find out once the 8K is filed, a stake in Archer. Guys, I'll send it back to you.
Phil, thank you for that interview. Fascinating stuff. Coming up, famed VC investor No Tosla is going to join us. We're going to ask him about the most promising developments in AI and his latest investments, and also his family's deal to buy the Super Bowl championship Seattle Seahawks. Squawk Box coming right back after this.
Welcome back to Squawk Box on CNBC. We're taking a look here at the futures, negative across the board here. S&P looking to be down by about 14 points. NASDAQ lower by about 58. A couple of movers within the NASDAQ we're watching. Intel with a $15 billion common stock offering. That stock is down by 4.5% right now, and shares of Apple are down 1% on a Jefferies downgrade to an underperform. For the Treasury market, we are looking at fairly stable yields here. 10-year yield trading at 4.664%, the 2-year at 4.22%, And the picture on oil slightly higher across the board here, as there aren't too many developments in the Strait of Hormuz. The president telling Axios over the weekend that the U.S. has only been semi-negotiating with that country. WTI is higher by 1.7%, 79.47. ICE is up by 1.6%.
Okay, we've got a great new guest on the program. We haven't seen him in quite a while, a tech pioneer who's backing a unique startup that he says could have a great impact, maybe even a greater impact than Google or OpenAI. Joining us right now is Vinod Khosla, Khosla Ventures founder. Good morning to you, sir.
Good morning.
It's nice to see you. You did make a big investment. Well, you've made a lot of AI investments, but this AI investment from last week turning lots of heads in part because there's a big impact potentially on Google. So maybe you can speak to it all.
Well, it's a stellar team out of Google, a team you seldom get to invest in. It's an area of AI research that really accelerate both AI research and research in the sciences. So it has this huge potential to benefit humanity through accelerated science. What's not to like?
Well, here's the question that I had, and I was thinking about this. You know, I would think that both Google and Anthropic and OpenAI are so ahead of everybody else. We keep talking about AGI and the singularity, that if in fact they are that far ahead of everybody else, by the time that almost anybody starts something today, will they be able to catch up and do something that's genuinely unique?
Well, we think so. I think in this particular area of accelerated scientific research, a great team like this can absolutely not only catch up, but get ahead of the curve.
What do you think the impact on Google ultimately will be? We keep talking about some of these big names leaving the company. We just talked to Sebastian Mallaby, who wrote a big book about Demis and the impact on the company.
Well, I do think Google has a very deep bench of researchers, so I'm less worried about Google. They have so much strength and they have younger researchers who will get an opportunity to step up. So I'm still bullish on Google's ability to make progress in the AI area. But this is a unique team and absolutely the team that got them a long, long way. And so very excited about this particular one without it hurting Google in a significant way.
You know, what do you think more largely about the economics of what's taking place in the AI ecosystem right now? We have a potential Anthropic IPO later this year. Obviously, big questions about what that valuation will look like, what the valuation of OpenAI will look like. There's conversations about circular financing. How do you see it right now?
Well, as I look at the investment opportunities, and we invest with a very long investment horizon. So when we invest, we expect 7 to 10 years before getting any liquidity. In that time frame, many companies will be started now that are worth hundreds of billions and trillions of dollars. I think we are seeing the beginning of this. This is not the end of it. OpenAI and Anthropic aren't the end of this AI story, they're the beginning. And I suspect we'll see massive expansion of the number of trillion-dollar companies impacting fundamental areas of society. So still lots of opportunity to invest in new companies.
What do you think, though, of sort of the data center ecosystem? We saw Mark Zuckerberg put out a fascinating essay this morning, but not just an essay, about trying to make AI for people and these new open weight models, but also putting together $1 billion fund effectively to try to pay communities, policemen, firemen, and others to want to build data centers in their backyard, something that's not happening right now in the state of New York and even in the state of Texas.
Well, there's enough states that want this growth and investment. I'm not too worried about data center investment. But I do think in general, it's a good idea to make sure that people aren't negatively impacted, their electricity rates don't go up. It's very easy for a hyperscaler to subsidized electricity for people in the communities where they're setting up data centers. So that's a good idea.
Vinod, I also wanted to ask you about another notion within Mark's piece, and that is that everyone will have free or affordable access to AI tools. So he sees a world in which people should have access to these tools, and in a world in which people want more compute power, that there would be a dynamic auction process to make sure the costs are as low as possible. If that comes to fruition, does that change the economics of how we are investing in AI and how these models are constructed in the subscription model that we have currently?
No, it doesn't. And it doesn't because you can have an advertising model. OpenAI has a free ChatGPT available, and Mark is well versed in advertising models. So I think there will be a free model, and then there will be paid models. If I'm doing serious research, then I do want to go much deeper and spend a lot more money. So, whether I want somebody to give me a search answer in 5 seconds or take 50 minutes or 5 hours to do research, it'll result in a different kind of payment methods. And enterprises definitely will use paid services just as they have in traditional enterprise software.
Vinod, what's your reaction been to the price of SpaceX and what that says either about, and look, there's so many component parts of that business. There's the AI piece, there's the data center piece, there's data centers in space, there's Starlink. I don't know where to begin.
Starlink is a great asset. The space launch business is a great asset because space launch capacity is limited for the next 5 to 7 years. We're investors in Rocket Lab. For full disclosure, I'm very, very bullish on Rocket Lab. And SpaceX is a good business. Starlink is a good business. I think data centers in space are yet to be proven. I'm somewhat on the skeptical side of it till launch costs decline well below a few $100s a kilogram. Why would one low price launch there if there's shortage of capacity? Further out, it may be possible to go much lower in cost, and many providers will do that. I have not looked at the economics of SpaceX, so couldn't comment on its valuation.
Okay, that's fair. And then we should talk about football. You've gotten involved in football. I see, by the way, there are people on Twitter asking you, they want grass. They want real grass. And are you going to be managing whether you're going to be putting grass on the ground, or are you going to be coaching, managing? How's this all going to work?
Look, the Seattle Seahawks is a great franchise, and the 12s, which is their local fan brand, is one of the best brands in the NFL. And live sports will be the one area that will be insulated from any disruption AI causes, so it's a great investment area per se. As to grass or not, that's for management to decide, not for me to decide.
Are you a huge football fan? How did this happen?
I'm a huge football fan. Me and my son have gone to most NFL games in Bay Area, probably since he was 4 or 5. Maybe more than half the home games. And so it's a great opportunity to do a family thing and make an investment that's diversification away from AI and technology in general, which is sort of my bailiwick. It's fun.
So it was like a $9.5 billion, it was like a $9.5 billion hedge to your portfolio, you know?
It's a big hedge.
How about the NBA, by the way? What do you think?
Well, I've always enjoyed the NFL more than the NBA personally.
Okay, so you're not going to be trying to buy a team?
I'm not buying in a team in the NBA.
Okay.
Look, live sports is a great area for investment insulated from AI disruption and technology disruption. So live sports is going to be a good area. Beyond that, it's what you have passion for, and NFL is what I have passion for, and a great brand like Seattle is a great franchise to buy.
By the way, what do you make of what's happening in Seattle, though? Because there's a lot of business leaders that are very frustrated with what's happening in Seattle.
A lot of business leaders frustrated in many cities, including San Francisco, California, billionaires tax. So the society will have to sort this out. I do think we will need to do more for more people so they get the benefits of technology and AI progress and others. I do think that's a national issue, not a Seattle issue or a San Francisco issue.
What do you think of the billionaires tax in California these days, where things stand?
I think it's a terrible idea. I floated an alternative, which I think is much, much better, which is also radical. In an op-ed in the Financial Times recently, I argued that capital gains and ordinary income should be taxed at the same range. There should be no difference because AI is giving capital an advantage, labor a disadvantage, and there's no reason to preferentially favor capital gains. It really distributes income the wrong way to the rich people. 40% of capital gains is paid by people making more than $10 million a year.
I read that piece, and my follow-up question to you, therefore, was going to be, what was the reaction that you got from your friends in the Valley?
I don't care much about reactions. I care about what's right and what I think is the right solution. There is a real need to have a large sovereign fund to help people who might be displaced by AI. This is one way to create it. $300 to $400 billion a year can be created as extra taxes by levelizing and making capital gains be the same as ordinary income. And that then has enough funds in a revenue neutral way to take care of the people impacted by AI. I think that's the right solution.
I want to try one out for... go ahead.
People making less than $75,000 a year should not pay any taxes. That's only $75 billion. And that should be very, very easy to do. And by the way, it's the same number of people impacted by that as voted for Trump, 75 million or so.
Let me ask you a related question. I was going to try this out on you, and I know you have the $75,000 cap, and I know you want to equalize capital gains and income taxes at the same level. Obviously, one of the rationales for a lower capital gains tax is to incentivize investment. Is there, under your plan, a way to think about a two-tiered model where maybe the first, I don't know, couple $100,000 in capital gains on any given year might be at a lower rate, but anything over that gets taxed at the income level?
Yes, in my op-ed, I do say gains on primary income or farms, sort of smaller gains, which every normal person has, should be exempt from this increase in capital gains tax.
So what would the rate be there for? I mean, what would be the cap?
Well, frankly, that can be much, much lower or zero.
Vinod, it's a fascinating one, and it's a longer conversation. We love having you on the broadcast and look forward to talking again very, very soon.
Yes, much longer conversation. I hope some presidential candidate takes up my urging in the Financial Times op-ed.
Thank you. Talk to you soon.
Thank you.
Coming up, crude prices holding steady below $80 a barrel. We'll take a closer look at the energy complex next. Squawk Box will be right back. talk about the energy markets. The head of commodities and derivatives at Bank of America, Francisco Blanche. Francisco, great to have you with us. Given the latest developments in Iran, or maybe lack of developments, does that alter your view of where crude finishes?
Well, the reality of the matter is we're expecting oil to be in the $70 to $80 a barrel range for Brent on the assumption that we were going to see some resolution. But if we don't, we're going to keep creeping higher into the winter. We have enough crude oil for now, but we have true shortages in diesel markets, gasoline markets, and also global gas. And we have some serious shortfalls in end user products in the energy markets right now.
Do you feel like, and this is sort of asking you to be a little bit of a political pundit, but I guess that's the nature of being a commodities forecaster. Do you feel like we're in this period where oil will creep higher given the demands that Iran is putting forth at this point in terms of war reparations and that the U.S. won't have free access to the Strait?
Well, it's a bit of a laundry list. So to the extent that the U.S. and Iran cannot come down to an agreement to allow free passage, remember, we are seeing just about 5 to 10 ships a day. We need to see about 140 to be back at pre-war levels. And frankly, to stabilize the market, we probably, because we're rerouting through Saudi Arabia and the UAE, we probably need to see 80 to 100 ships a day. So again, we need to see roughly 10 times the flow of ships to normalize prices and prevent an escalation into the winter. Yeah.
It sounds like the risk is to the upside then, to your oil forecast.
I mean, there is a little bit of upside risk. It's been on and off now for how long? But the challenge, of course, is that we've been withdrawing inventories all this time, which is what's prevented us from moving higher. So to the extent that we don't
have the inventories we used to have.
We don't have the inventories we used to have. So to the extent we don't come to an agreement, there's going to be an escalation. So I think that's pretty accurate. And I think it's going to hit Europe probably more so than the U.S. Because of the exposure to particularly gas, but also Europe's an importer of a lot of fuels.
Mm-hmm. And right now Europe is undergoing this unprecedented heat wave, which is also putting some strains on what they're paying.
That's right. There's a major heat. We're in the 5th heat wave in Europe. The Danube is the river. Well, a lot of the rivers in Europe are down. So we're having issues moving grain from the Black Sea through Europe, but also we're having major problems on hydroelectric generation, and we are seeing, importantly, lower nuclear power generation because you need water to cool the reactors. You need fresh water. And with the heat, that's becoming a problem too. So it's kind of starting to be an issue in Europe, and we're seeing that in the price of gas, which is now $20 an MMBTU.
Wow. So is this like an energy crisis that we're facing or looking at in Europe?
I mean, if Hormuz doesn't reopen, most likely yes, because at the same time you have Ukraine striking Russian refineries pretty hard, and that's further straining the availability of diesel and other fuels. So it's kind of a bit of a combination of factors, but we have about a month and a half. But as you know, after the summer, eventually through the fall, you're going to the winter, and we have essentially 2 months to prepare for the winter.
Right. We pay attention so closely to WTI and Brent here in the United States as a measure for the impact of the war, but on the refined product side, it's a much different story just because refining capacity is so limited and is so tight at this point. What is your assessment on where we are with pricing there?
So we are seeing record what's called crack spreads, the difference between diesel and crude oil. We're seeing $80, $85 a barrel. So the price of diesel alone, just the differential, is higher than the price of WTI. That's kind of never happened before, except for a few occasions. And you've seen also the price of gasoline differentials very, very high. Refining margins are record levels. And this is a combination of Ukraine striking Russian refineries, as I mentioned, the lack of vessels through Hormuz, which is a huge refining center, and also the fact that the Chinese have essentially limited their exports to the Asian countries that surround them. I remember these are 3 of the world's 4 largest refining centers, together with the US of A. So the net result is American inventories of petroleum fuels are coming down very quickly as well, right? So it's a complicated background.
Francisco, thank you.
Thank you.
Okay. Big news on Intel, Meta, and a downgrade for Apple. Those stories and more, they all broke on Squawk Box. We'll tell you about them next.
Breaking on Squawk Box, Intel is set to offer an additional $15 billion in common stock. The company was not specific on how the money would be used. The stock is down this morning and down 30% from the June 30th high. Flight company Archer is up big after a deal with Boeing, which involves an investment from the airplane manufacturer. And Apple downgraded by investment firm Jefferies to an underperform. The price target also cut to 263 from 285. The analyst note says our supply chain checks suggest the all-glass iPhone has been canceled due to low yield. We view this as a major setback. And in a post this morning, Meta's Mark Zuckerberg said the company will open the weights for its new AI model, Muse Spark 1.2. That means anyone can download the model and run it themselves. See the stock in the pre-market there.
There it is. Final check on the markets right now before we send it over to our friends on Squawk on the Streets. S&P 500 off about 17 points. You look at the NASDAQ down about 86 points. The Dow off about 122 points. I'll show you Treasury yields as well. Right now you're looking at the 10-year note. As we flip that board around, you're looking, well, we're going to flip it or we're not. Okay, there it is. 4.6. You're looking at the 2-year at 4.2. Make sure to join us tomorrow. Squawk on the Street begins right now.
Good Monday morning, everybody. Welcome to Squawk on the Street. I'm David Faber with Sarah Eisen and Mike Santoli. We are live from Post 9 at the New York Stock Exchange. Jim and Carl both have the morning off. Let's give you a look at futures as we get ready to start another week of trading here. You can see we are set up for a slightly lower open at this point. Our roadmap this morning does begin with, well, how about that SpaceX post-lockup rally on Friday, snapping a 4-week losing streak. Further gains expected at the open. Stock once again trading above that IPO price arrow.
Plus, the AI demand boom. TSMC says sales surged 45% for the quarter, while Intel plans to sell $15 billion worth of stock as it sees growth opportunities in physical AI and custom chips.
And Meta CEO calling to spread AI's wealth and opportunity to users around the world and to the communities that host the data centers powering the build-out.
All right, let's start with those markets. All three major indices coming off what was the best week they have seen since April. The S&P posting another record close. Mike, good to have you here, and nice to turn to you as well on an important day for you because you're launching a new newsletter called The Market Memo.
Yes.
It's about time. I've been meaning to, tell
Listen,
you.
I wanted to make sure this newsletter thing really caught on.
That is a great picture of you.
Oh, thanks. That's a stray candid. It's
Mike always looks good.
What
We're talking especially glamour shot from Mike.
That's from years ago.
Serious yet,
Looking over my shoulder is the prevailing mode that I like to operate in. Yeah.
Mike, what can people expect in Market Memo? And speaking of the market, what do we make of the setup as we start to look forward to a new week?
The core of this newsletter is the column that I've written for CNBC Pro for over 10 years, which is sort of a successor to many columns that I've written going back 25 years. So kind of a color commentary on the market, field position, where we are, especially fixating on what I think are interesting themes under debate, plus some extra little tidbits, some proprietary data, some, you never know, maybe some later observations in there too. Interesting that we come in here, 3 all-time highs set by the S&P 500 last week after 2.5, almost 3 months of nothing. And I think one of the observations that's important to always remind people of is new highs are more bullish than bearish. In other words, it's not necessarily a warning that we have look out below conditions when we get to a new high. The S&P 500 has spent about 7% of its history at an all-time high. So it's nothing too particularly new about that. Now, how we got there, I think, is interesting because for as much as people were celebrating the broadening of the market and the fact that the median stock kind of took up the slack when the hyperscalers were under pressure and the semis were falling 25%, the way we got to all-time highs was the heavyweights re-engaged, ripped higher. The NASDAQ 100 outperformed the equal-weighted S&P 500 since July 29th. That's like 7 trading days by 7 percentage points. That's how this works, okay? The big guys have to drive the index ultimately. Now, the good news is the rest of the stocks also kind of carried along higher as well. So it's reacting to, obviously, a blockbuster earnings season, investors have room to re-risk after having, I think, pared back exposures through July. We got that purge, as we spoke about with situational awareness. I think that was a little bit of a green light for a lot of folks. I still think there's questions. We might have unfinished business in the momentum unwind. I think companies collectively are probably over-earning, and we're giving them too much credit for all this pull forward of demand and a lot of the marking to market of the private investments and everything else. But for now, it's just hard to stand in the way.
I mean, there are a few fundamental drivers.
Definitely.
You mentioned some of them. I think we should just pause because we're now 90% of the way through on earnings season, and it's been a blockbuster quarter yet again of double-digit growth for corporate America. Earnings are tracking 30% higher year over year. And if you exclude Alphabet and Amazon investment gains, then that's a big component of it. But we're still talking about pretty good growth, and it's good breadth as well. When it comes to the stocks, 81% of stocks and 10 out of 11 sectors are on pace for positive year-over-year growth. So that's good. There's also this kind of new Fed realization, which I think is underpinning some of the rally that we saw at the end of last week, which is we're getting a Fed that, and the market's still trying to figure out, is talking hawkish but acting dovish. And maybe that's what matters. We also got a jobs report that came in a lot less than expected. And so that really took down some of the urgency for the Fed having to raise rates to combat inflation. The other point in there is that average hourly earnings, which is wages, which would be a proxy a little bit for inflation, was soft at 0.1%. So guess what? The September odds of a Fed rate hike went from, it was like almost fully priced in at the end of July to it's now less than 50%. So the Fed might not even have to hike at all. And that's a further tailwind because this economy loves easy policy and liquidity. So between the AI investment trade and the earnings and the sort of more dovish Fed and a fundamentally good decent economic backdrop, that's all, further firepower.
Yeah, and I think the way I always think of these things is the reaction by the markets to the Kevin Warsh press conference was kind of this scare that allowed people to have the relief. I mean, you basically had to have people get a little bit worked up about the possibility of the Fed tightening into kind of an ambiguous inflation outlook in order to, I think, shake people out and get this idea that maybe the bond market was going to get de-anchored, and it didn't. Okay, over the past few years, the 10-year Treasury yield has spent very little time above 4.6. Buyers have showed up there, and it happened again. At least so far, we're still at 4.66. It's not like it's in the clear, but I do think that it was an intentionally non-transparent message that was sent, and the market had to work its way through it. But you're right. I mean, now here's the funny part. One of the things that Warsh likes to say is, we don't believe that a strong economy is reason to hike, right? We don't believe in the Phillips curve, in this trade-off between a good job market and inflation and rates. Well, the corollary to that should be weak jobs numbers should not make you easier. You should be fixating on the inflation data or what the market suggests about where inflation's going.
Well, the good news is mentions of inflation in corporate America has come down from the peak. I mean, Bank of America has a good chart. They're tracking through earnings season. I mean, Wells Fargo, excuse me. Earning mentions of inflation. This is a big week. We get CPI on Wednesday. And so we'll see, again, to your point, Mike, about how big of an inflation problem there is. We're expecting a little bit higher headline, but softer core. So there's the debate, right? Do you target the core, stripping out food and energy, or do you target the fact that inflation continues to be above target? Here's by the way, David, the mentions of weak demand on company earnings call from Bank of America, and that too, nice to see it come down, at least.
Yeah, the number of mentions. Mike, we should mention, of course, we are headed into what has typically been a slower period for the markets. It's the end of summer, sadly, last few weeks here prior to the Labor Day weekend. I mean, and we are seeing a bit lower volumes and lower volatility. I don't know what your expectations are. Obviously, these days the headlines on AI will continue. We'll see how they get traded. Obviously, we're coming off, for example, a significant day for SpaceX shares up dramatically when fears about the so-called lockup may have been overblown.
In general, yeah, you can expect it to be slower, but also for that reason, a little bit bumpy in air pockets or maybe just sort of trendless. Boring markets are bullish markets. I always say that. With the VIX down at 15, you actually, that's the market saying we think that most of the macro questions are not particularly threatening at the moment, and the individual stock move, kind of catalysts are behind us with earnings. Now, seasonally, often August, September, you do get some turbulence. It often happens in a midterm election year. These are well-known things. It's nothing guaranteed, but SpaceX clearly took its medicine before the report and the expiration of the lockups in terms of how that stock was down.
Right around that 135 IPO price. Of course, the stock soared after the IPO, but has been as low as, I don't know where the lows were, at 10 something, right?
Under 110.
Yeah. But you can see there. Of course, it's funny because we are having a bit of a different conversation even now about SpaceX. Obviously, Starlink is an important part of the conversation. Starship and the ability to continue to see progress in terms of the launch cadence there. But it is now talked about as a hyperscaler, which really was not something that was discussed that much in the lead up to the IPO.
Not remotely.
Viewed that way.
No, it happened all at once,
Yes.
and it's crazy because all of the entire VC industry that owned this thing for 15 years was doing it on the premise of, the launch business and Starlink. And, both are still there, and both are going to do what they're going to do. But yeah, it's immediately about like how fast they can deploy the compute, and they're going to have an edge in doing this. And of course, they have this very aggressive timetable for how fast they get paid back on that. Whether that's a sustainable economics of that business or not, who knows? But less than a year payback on tens of billions of dollars in CapEx. We'll see.
It makes it more of maybe a palatable short-term story for investors. Although then if you're a hyperscaler and you're spending big on AI, you have to stomach the fact that the spending is increasing exponentially. And originally the stock sold off on earnings because they increased their CapEx guidance.
They did 18 billion, and it's only going higher from there in terms of the quarterly spend that they're going to be doing there.
Blah, 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 blah.
Continue to about all the CapEx. The key conundrum for the market, which will not be figured out this week or next, or even.
You people are idiots. You bashed my space. Screw you, CNBC. I don't want to listen to your hogwash. Oh, we called it bear. We were bearish on this. We can't stand Elon. Here's Sam Telly. Well, you think they'll ever say, well, we were wrong about SpaceX? That's my name. I'm Washboardjim, the founder of the Sneaky Snake trading strategy, giving these idiots shit when they deserve it. See, the problem is that we have YouTube, and I watch them unreluctantly, against my will sometimes, of their propaganda. Apple's going to run to 500. We're going to go to 6. Oh, we're looking for a 16% pullback on Apple. Microsoft. Well, you got Netflix going from 100 to 1,200. Boy, we love this stock. And then all of a sudden, no, we just can't stand it anymore. All of a sudden, why do I have the VWAP? Let me move this over here. And I can look at it when I pull up a stock. Well, look at. I have, let me see, I might readjust this support level. And I think we're there. Yes, we are. We are here at support. Then the next one's right there on IWAMS. You know, when I'm wrong about a stock, I'll say it, but these people will not. 1 week, we're doomed. Next week, we're buying the dip. They're the worst. I mean, they used to not be like this. But I think ever since Trump invaded their space of reality buying Twitter, and they used the layoffs of Twitter like, oh my God, when actually half them people were DEI hires that didn't do crap. So I think Elon did the right thing. Take off my shoes. Oh boy, turn on the air a little bit. I'm really excited. I'm going to start a news broadcast of just good news from now on. I think I will. I'm dreaming of a white smellers. Buried and bright, may all my dreams be white. I'm gonna show a little bit of nakedness. I'm dreaming of a white Christmas. Hike. Oh, yeah. What time is it? 17 after. Man, I made a mistake in that big old double shot of espresso. May all your dreams be nice. La 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 la. You're bashing Meta too, you bitch.
Creator, at least a business creator. He also says in here, It's surprising that the discourse from many developing AI is so filled with doom. I don't understand why.
Oh, I don't understand.
Much of humanity's relevance would rush to build.
I mean, these people are so sick. I don't even want to listen to them pump them now. They were on a rant for 3 months about Meta. Meta is spending 104. Look at your headline already right out. CapEx. 145 billion to make it happen. Safety requirements for the model. I say what they need to do is cut about 50% of the liberals off Facebook. We got to break out with a wedge or descending triangle. So we got to break the double top. Meta, I'm done with you people. You're so full of crap. NVIDIA, we've got a snake on NVIDIA. Reddit open. Meta's bouncing off the 200. Mama. This week we're going to try to stay in the trades longer. Jackdaw snipping at your nose, Yuletime carols being sung by a choir. Merry Christmas to you. Man, had a freak. I got 7 minutes. Yesterday, I had a. I'll get back to stocks. Talk about it later. Options chain positions. Oh, shoot. Make sure I got all my accounts up. Okay, we'll go watch this real fast. Oh, water. Good morning, retail traders. GSM, we got volume, ACHR, really got a lot of volume. Oh my gosh. This ACHR helicopters, bzzz, Joby, SpaceX, I mean X. Oh shit. There's our channel of support right in here. 1, 2, 3. SpaceX. I wonder what that would be like. Oh, we got a little head and shoulders. Ying yang. Oh, I don't know. That pulled right back to support right there. Fuck. This can't go on today. Got sticky finger. Oh, that's right to support. Then we'll just lock this one here sideways for low. Right there. SpaceX. Bum 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 bum. IWM, we have to have the 10 cross the 20. SPY lost that first support. Then we got one here on SpaceX. So we got a megaphone. We got a megaphone. We got two of them actually. Let's see what this one does. Right there. And right there. And right there for resistance to break on SPX. So I'll put that right under the, well, I'll wait until we open up. See where we land. Hi. This is bullshit right here.
Gets into the face of Dejanay Carrington. So clearly was a foul, was not called.
Men should not play sports against women.
We got SPY moving. Got alerts going off. SPX, SPY. We got the 200 here on the SPX. SPY got 773.90 for resistance. We got 301.11 for IWM. PLTR. Ripping. Okay, we're getting ready to break resistance here. 7770 or 7775. Three white soldiers. Apple's pulled back more. They want 16% pullback. NVIDIA's got some inverted hammers. We got the crossover. We got to hit resistance on SPX as it starts to pull back. We're at the VWAP on the /ES. We just broke it. Here we go. Three white soldiers. I'm not in yet. I want to see if we can get a nice little pullback here. We're definitely at resistance. We got that low volume scene going on again. We're starting to curve up on the 200. We're squeezing on the shit. I'm gonna miss the morning trade again. We got an alert. SpaceX. I'm gonna set an alert off this bottom of this body of each one of this here candle. We got an inverted hammer, red, after 3 white soldiers. So this is kind of bullish. Oh, a gap down. There we go. Get ready. See if we hold the 200 and be bullish. And grab one. Oop. We're at the 200 right now. We're back at resistance here. We're under the 9, 10. I don't know if we're going to break it or not. We're at the 63 on the 1 minute. Kind of slow. Yeah. AMD dropping, Apple at support. U.S. economy is shedding jobs. Here's why the news, that's news, good news for stocks. Yeah, there's too much undecisiveness right now. The very low volume. This looked like a pretty good candle right here, but it didn't break out. Now they're trying to bring it down. We've got a doji on the 2 minute on /ES. SpaceX hit the second support. So far, no good. One, 2, 3, 4, 5, 6, 7, 8, 5, 10, 16 candles. This should be the breakout here. PLTR still working. China's not doing too hot. Bucket. And we're going to find out right now. This is the last chance. And right now the volume's very low. Just doesn't have the mustard yet. Kind of bullish, kind of not. We got some higher lows. We got a symmetrical flag. Mm-hmm. Look at the puts. Not any big sell-offs. Apple's about the only one. Oh, there we go. Now I've got to break the VWAP. I don't know if I can do that. We got ACHR up, Oxy, CrowdStrike, PAWN. Pretty hard resistance on the /ES under the VWAP and the 200 SMA. CAT is up. Okay, we got a triple top. I don't know if it's going to break or not. So I think I'm going to get out of this and rethink this. Oh shit. Not enough time. We've got the crossover now. It's going to keep me in the trade, I think, till we break it. If it doesn't hold it, see, it's locked. It could make up its mind right there. Fuck, come on, do something. Yeah, there's too much indecisiveness. Three black crows. I picked up another one right there. Let's see where I put that. $380 and $590. That helped. These are the 7770s. About even. You know, we're at a double top. Know if I should sell them here and take the smallest loss. If I get one fat candle, I'm out. 3 white soldiers. Ah! Come on, you dog. We're above the 10. I'm staying in it. We're at the VWAP. I mean, this is an exit idea. Let's get on up here. Back to even. This is the hard part. When you're even, should you sell it? We're still above the 10. And we're at a triple top. And we got inverted hammer. I'm just having a real hard time breaking it. These fuckers. I like that hammer right there. I like that one. And I like that. That I don't know about. That one I don't know about. The rest of them I do. And the moment I pull this trigger, it's going to pop. Still staying above the 9. There we go. Now, come on, just give me a little bit of profit. I'll take a little bit over nothing. Fuck, finally. I'm out. Fuck it. That was too nervous. That was too much. Ethanol free. That's what I'll use. No! You be balaka! $560, $570. And I took $520. I get, ooh, look at that. Yeah, that would have tripped me out, that candle right there, if I was still in it. I'm gonna turn off the air conditioner. YouTube, 590, 380, out at 520. I do not advise new traders to cost average down until you become good. But I always, even if I always make sure that I know how much I want to put in a trade. You'd think by the way the day started out that we got a double top right now. Whoops. Spies at the 200 SMA, 3 white soldiers. 3 white soldiers on the SPX on the 2 minutes, both of them. We hit the orb on the 5 minute /ES. We got a real cool candle on the 30 minute on the /ES. Said body over body. That's still bullish. Body over body over body. You got that long leg doji on the 5 minute, bullish. Bearish if it goes up, right? is the opposite? We're starting to break out on the SPX. What was I doing? Looking at the 1 minute on the SPX earlier? Huh, that's a little different. We're at the 200 right now on the SPY. That's interesting. I'm afraid to buy it right here. We're bullish on the /ES on the 1 minute. Don't trust nothing. So we had the crossover right here. Back at my entry price here at 590. We've got a turnaround coming on AMD. It's just 482.61 to break. Meta's under the 200. If that breaks, we could shoot up to a double top. We have an ascending triangle on Amazon. The Google's got to break the 20. Microsoft is still bullish. Pot stocks. Tilray's at 450. It's above the 200 on the 1 hour. Nancy, a shot of vodka and the Valium. I'm up $50, baby. Let's go. More than that, probably. Man, that sucked. I'd be up a couple $100 right now. $70 trade. Double top on CRM. Did I have that on? No, I couldn't have that on the 1 minute when I traded that. No wonder it looked like that. 3 white soldiers. Yeah, that's a good look. I had that on the wrong time frame. I think I would have stayed in that longer. Well, that was weird down here. Intel plans to sell $15 billion worth of stock after it has risen 400% in a year. Intel. Oh man, 720, 40. Shit. Oh man. That'd have been a $500 trade right there. I'd been done for the day. I'm going to raise my alert above the 10. I'm going to keep it on the 10, always above the 10. Right now on the /ES, we pulled back to the 10. And I'm going to put my alert at the VWAP. Right there. There's an inverted hammer. That's the first sign of a pullback. Well, shoot. PANW is up $15. Dell is up 20. Those are your kingpins right there. Make sure I didn't buy nothing. Yeah. So the puts are expensive. The puts are very expensive. The puts are very expensive. double top on the 1 minute on SPX. And then puts are very expensive. That don't make no sense. $77.60 puts at $8 or $7.90. But man. Slash ES is right at support. I'm gonna bring this one up a little bit. I like that spot there, but we got better support right there. Okay, we're gonna know if this thing's gonna be bullish. Triggered. Today, I'll make it simple. Cook my stew tonight. It's a monster. Right to the 10 triggered my alert. $100 right there. We've got an ascending triangle on PLTR on the 2-minute. So far, it's a clean day. So the people on Squawk were worried about jobs and what it was going to do to the economy, and here it says that the U.S. economy is shredding jobs. Here's why it's good for the stocks. And that's what AI is going to be good for the stocks. More sufficient and less opinionated if they do it right. People have become mischievous, where you can't trust them anymore. $301.05 is IWM's resistance to break. /ES. Oh, I was thinking of the VIX, not /ES. I got to wake up. It's the VIX. We got a double bottom on the VIX. Snake breakout pullback. VIX is above the 20. That would have been my trade of the day. AMD hit the 200 and pulled back. NVIDIA, the 9 is crossing under the 20. The 10 is crossing under the 20. Now we're back at the 10. I got to raise my alert above the 20. Or should I raise it above that? I'm going to raise it above my resistance line. Could grab one here, but I don't trust it. This last time we were three black crows on /ES on the 1 minute. PLTR is now breaking the orb. PLTR is now breaking the orb. Triggered. Shit. 580 I could have got. I was just within penny. I couldn't get it. Oh man, that would have been a good one. That would have been a good one. Well, both of them I were just off. This one here, I don't know why it didn't trigger. It should have. That'd have been a good minute scalp. Couple hundred and, yeah. $150 at least. Chop chop. Bugs, watch what Bug says. Randy. We're going to find out here any second. We've got another flag. Ah, damn, I'm so mad I didn't stay in that thing. I didn't stick to my plan about it staying above the 9, 10. So I think I'm going to get some tea and come back.
Punta Cana was a blast, but it's now in the past.
No wonder it was afflicted. It's hard to train an old dog new tricks, but you will sooner than later to trust the chart indicators. I know it's hard. Yes. Let that thing go, boy. Well, it's yeah. Amazon just hit resistance. My second one. All these crossovers. Microsoft, Google, Meta. Well, that SPY bounced right to the 200. I'm out. That'd have been a good one. I'm going to raise my alert. Now I'll leave it right there. Move it up there. You can't buy right now. I know that. And I'm going to raise /ES right there. Could make another soldier. Tweedly, tweedly, tweet, tweet, tweet. All this living love for me. We're at the market, new highs here. You know, that'd been an $800 trade. $485 to $8, 8 something. I caught it right. I just didn't hold it. My other account, I didn't hold it either. Made a few extra, but oh, I didn't stick that in there long enough. Shit. Got a dragonfly. Just waiting for my chance. It'll be a long day. I'm making some chai tea to help me. Whoop. Chai tea for me. AMD double top at the 200. Still bearish. NVIDIA breaks the 20. We might get a little bounce. On the 2 minute, 1 minute, 1 minute. Ooh. Two minutes bearish. Meta is squeezing between the 10 and the 20. This train keeps going. This is the buy signal. $690. There's a doji on the 1 minute on /ES. That's $100 right there. And 77.70 calls. 720 to 820. So right here as it started to break out, I about grabbed one. TSM. Got a triple top on the 2 minute. You can almost call it an ascending triangle. I got to put on some deodorant, man. I'm starting to stink. Watch the trigger here. I want to make sure I got my volume up so I can hear it. There it goes, right there. I knew it was coming. One minute's a little harder for me. The 2 minute I would have took. I mean, the 1 minute I would have took that trade. Hammer, inverted hammer, respect. Yeah, I'm gonna stick to the 1 minute with this idea. Yeah, there it is. Let me see if I have the chart here. Fuck. Put the 1 minute on that one. Yeah, the 1 minute I'd have stayed in that trade. We got inverse head and shoulders, and we got the hammer, inverted hammer off the, kept riding at 20. So I'll keep that there where I can watch it. Says it's called an ascending triangle and /ES. 5 minute looks nice too. Inverted hammer, inverted doji, respect, 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 respect. NVIDIA. You got a lot more people trading SPX now than ever. Retail traders. Hymns.
To hims and hers. I was speaking to Matthew.
I'm gonna get a metal gas can for my lawnmower. Start using ethanol on all of them. Not ethanol, but ethanol free. It's hard to wait. I'm trying to stick to my rules. We've got a nice support right down here. I'm gonna go a little bit above it. Get ready. Triggered. Oh, definitely triggered now. We've got the VWAP over here on this other one. Bebop. SPX has 3 black crows on the 1 minute with a doji and an inverted hammer. I'm a little bearish as long as we're under the 63 on the /ES. There's a 5-minute candle. Inverted hammer on the 2 minute. Spies at the 200 on the 2 minute. Well, they dropped the hatch on that one, didn't they? The 10's now trying to cross the 20. More drama. SPX is coming close to the 200 right now. Those puts are looking good. Oh, I know what I can put on this one. SpaceX bounced off the 63. Come on, you bitch. I don't think there's really much to make this market bullish today. Except Trump's being Taco Kid. We're at a resistance, just to let you know. But we have 3 white soldiers, not really sure one, but definitely on the 2 minute. And we're at resistance on the 1 minute at the 63. Pretty hard break. If it breaks the 63 on the 1 minute, the slash ES, we're bullish. If not, this is an idea to take profit if you're in it. It's 10 o'clock, my lunchtime. Real hard to break. We're going to know in a second. We're going to know any second. Right when them buys came in, a bunch of red. Well, it kind of sucked. You got an inverse head and shoulders. Still bearish. $7,770 at 420. Snake breakout, pull back higher low, inverse head and shoulders. Hold it. As long as we stay above the VWAP on /ES. No, we gotta hold it. Not good. Wall Street Journal, stocks open flat. I'm not sure about that. I'm gonna get stopped out of here. If this thing don't hold right here. I got the VWAP. I'm counting on the VWAP. We've got an inverted hammer with a tweezer bottom with a higher low, double bottom. And on the 2 minute, we got to break that 9 EMA and the 63. Boop. We're still bearish. Break it. $7,770 at 420. Please break it. There's $100 on my contracts. Okay, we're hitting the 20. I'm going to sell my personal right here at 540, 550 from 420. And we had 3 white soldiers on the 2-minute. And we got to break the 20 SMA. We stay above the 9 EMA. We're still bullish. On /ES. So we're above the 63. That was a hard resistance. We're going to squeeze here in a second. Not sure what way, but we got these soldiers right here. And we got that previous resistance. Snake breakout high or low. And a little bitty boom. Okay, we're coming back down again for a triple bottom. This is the retest. SPY is at the 201 minute SPX. We're still good. We got a megaphone. And there's the pivot point right here in the channel. I haven't done that in a while. Pivot point. Squeeze it, baby. Give it to me. Break it. We're at another resistance. Right now on the 2 minute, on the SPX. We got a triple top on the megaphone here. I always wonder how many of these are getting bought. Oil killing us? Randy says. Come on, man, do something. See, that's not a good looking candle right there. We're still above the VWAP on the SPY with a rising wedge. You got a two-headed snake. Could be. Or a triple bottom. Get the 200 here on the SPY on the 2 minute at 77377. That's a major support level. And we got to try to break that 20. We're squeezing. I don't know which way. Yep. Here's the triple bottom now. We're at the VWAP. SpaceX stock moves above the IPO price for the first time in almost a month. We're at a double bottom. .5 minutes/ES hit the, I don't know what the 200, I think. We're still bearish. We're still definitely bearish. Prepare ye in the name of the Lord. That's toughy. Definitely at support, and it's kind of weak. Low bone. Puts. We're definitely weak. And we're about to the bottom of the megaphone right here. Let's see what happens. The 770s at 250. $260. I wouldn't be taking the trade right now until you break the 9 EMA. You're under the VWAP. I mean, you're under the VWAP right here. I get 260. I'm stopping out. We're definitely bearish. Now you got the 9 crossing, the 10 crossing down. IWM bouncing? Nope. Come on. More drama? There's not much in here. We got a long ways to drop on this other megaphone if that 200 doesn't hold. Oh, that was on /ES. Just break the deal up. Oh. So we had a quad bottom here. Yeah, it's 10:43, 11:43. And puts would have been sweet. Puts have doubled. You're hitting another resistance here. We're above the 63 now. It's an exit idea on the three soldiers. They're at 360 from 260. We could reach the top of the megaphone again. I don't know what this represents. Maybe the one, it's a wick, whatever that is. Definitely, if you got in that bottom, scale some out. It's still bearish as long as that 9 is under the 10. Now you just hit the gap. That'd be nice to hold right there, and that'd be a big meaning. If it holds that gap, that's positive. If it holds that gap, we see another candle up to here. Hold it. This is it. Gotta hold it. No more. Don't let him have it. No. I didn't hold it. Still bearish. Dell's up again. Damn. That's one that I thought would never do this. We got the 7760s at 610, 620 on the shoulder line if it holds. That's on the 2 minute. And then the 1 minute on the slash ES. SPY's got a head and shoulders. It has to break the 200 before it comes bullish. I'm going to set an alert right there. On the SPY. There it goes. Almost. Huts, hut out. Do it. Got a megaphone. Kinda. Uh-oh. Triggered. Boom. Now we finally broke the 63, but we don't have a body above it yet on the SPY. Now we got a double top. Another exit idea. There we go. I need to make a lot of money here. Wouldn't it be nice if it got back up to that? Here's your next resistance. Now, what happened? This is an exit idea. It's out, stopped. Just stopped right in its frickin' tracks. Big engulfing candle. Personal count out. We're definitely at a resistance. This breaks, man, it'd be a trip. We're definitely at a resistance. Three white soldiers. Now, whew. Nice. That was really nice. Now what to do? What to do? I know what to do. We have an ascending triangle on Amazon. Megaphone reached. Nice. Megaphone resistance. We're at another resistance here. Anybody take that trade? We're still bearish. The 10 is under the 20. So you hit a resistance. On the 1 minute, we're bullish because the 10 crossed the 20. And we got to break this next resistance. So I'm going to prepare to get back in this trade. If it breaks. And I'm going to go put my baked potato in. This breaks, man. I'm getting. I got to make up some money. Thank you, Lord. Thank you, thank you, thank you. I gotta buy a new watch band for my watch. price. That's SPY. I don't want to look at that. I'm looking at the wrong one. Jeez. Look at that. That's pretty. That is pretty. We're definitely at a hard resistance here to break. We'll know any second. Oh, that's not a megaphone. It was on the 2-minute. Everything at once. That's beautiful timing, Jimmy. The best yet. Now you see the 10's above the 9 on the 1 minute. That's bullish. 2 minute, we just now broke it. So if this breaks, we got a head and shoulders up here. That's 777030. Say yes. What'd I say? Head and shoulders. sometimes everything just be in the way at once, especially when you're in a hurry and you take your job very seriously. Cheeseburger in paradise. That's it for today's song. Shall we all play along? 3 black crows in the middle of the hose. 2 of them while I eat lunch. 7770. There's Doji. Oh, who's this good morning to? Good morning, everyone. I am doing an audit in unit washer dryers. If you have a washer dryer unit, when you move in, please reply here. I'm not gonna do it. Randy? Bake it. Today's lunch. Oh. Oh. Oh yeah. Today's lunch. Come on, you bears. Break it. You got to hold this position, 778-487. I'm getting ready to squeeze again. Let's do it. See, this is a bear flag. It can easily come back down and break down this channel. But I'm not sure about this time frame. They're like 10-minute sell-off. Squeeze. Do something. Break it. 1 minute has to break the 9 EMA. Jesus. Pit shit. There's no conviction today. This was nice. Showed some strength. Smart traders say wait. The S&P companies with growing revenue. Some of their stocks are cheap. Tweezer bottom. Slash ES is above the 200. And we went back to the right shoulder on the inverse head and shoulders. Chicken. So you have two options. You can come down here and hit this 200 sometime today, and then you have a confirmation of a triple bottom. Or the 10 holds the 20 right here and kind of kisses up against it. And then over here you've got A doji and a doji. And that's only on the 1 minute. And we're not very bullish today. It's starting to get a little cleaner, the charts are. Head and shoulders, you got your right shoulder, you got the three white soldiers. Hit the trend line. You're got a head and shoulders. Inverse. Now you're at the 63 on the 1 minute, so that's an option to get out of the trade. Real tight today. No matter how good the news is, I don't think it matters anymore. Not with these fat cats. I think that's why they're talking the way they are. They're all into bringing the market down. Major support right here. You see why that was an exit idea at the 63? Taking your time. I'm having a feeling we're going to get down here. If this inverse head and shoulders doesn't hold. Back at resistance again. still. I don't know what this chart is, but I'm getting to where I don't like it. So I'm going to get rid of it. Oh, that's the cloud. So I'm going to put that in a different time frame, 5 minute. Yeah. We had 25 minutes of selling. And we got a symmetrical flag crawling out of the snake. Let's have a big breakout. We'll put that right there. Now we got to break the, now we're at another freaking resistance. If this breaks the 20, this is going to be nice. Break it. Boom. More. Major resistance. Somebody bought it. Somebody bought it. We can go higher. Please. Slash ES has to break to 63. Meta's back under 600. We got, yeah. Come on. Boy. Back to the VWAP. Triple bottom. This would be a scalping place. If it holds, stop loss below that candle right there, 775838. Oh my God, that sucked. What the hell happened there? That sucked. I don't know what happened there, but that was ugly. Somebody just threw like big dollars out. Shit. Should have grabbed some there. Definitely the market's in the bear's favor right now. That last whatever happened there, didn't like it. I didn't like it one bit. We're definitely bearish under the VWAP. Man, oh man alive. It's going down more, I think. Because I didn't like that action in a bit, one bit. SPY's got a lot more to go down. What happened there? Oh my God! Man, I knew I didn't like it, but I didn't like it that bad. What happened? Is there any news or anything? Is there any kind of news? Fuck that thing, get no damage. We'll just blow them up more. That sucks. I don't know what to do. Shit. This could probably get a lot worse. Well, I just got burned. I got to get out of these and figure out how I can make this up. Shit. Well, that hurt. That hurt. Damn it. Well, I lost about 1,600. Oh man, that's the worst. My worst trade of the year. NVIDIA, VIX hit much support, resistance. Let's just fucker bounce back up now. Jesus. Protester compensation? Gummy. Trump's in a pickle. Should have kept bombing. Might have to start going against him. Didn't finish the job. That hurt. I got burned. Glad that didn't affect my personal account. If I'd had it in my personal account, I might have lost 3,200. Because that's how many I had. I don't know. That was a bad deal. I'm not totally disgusted, but I'm very disappointed. Because everything else I loved, but this. That candle sucked. You wouldn't believe what them puts are worth now. Puts went to 2,200. I don't know what they went to. That's a 300% gain, 400% gain on the puts. I didn't have them very long. Oh, she wanted to put it up there twice. I think that's one of the biggest reactions I've ever had when I was in the call on a knife. Ugh. There's almost too much crap on here. Man, I'm just sick now. Time for some chocolate. There's like that one candle was $600. I was saying I didn't like the action earlier. I should have got out. When I saw that first, kind of like, what the heck was this? I'm gonna just wait until we're down at the bottom of the megaphone now. We got hell, we can drop a lot more. That's the intraday. I'm going to go on my personal account. The 7750s. $77.50s. Yeah, I'm sick. That's a big gulp. I'd just take the day off and go up and mow yard. Tipton. I think I'm gonna make me some coffee. And debate what I'm gonna do. If I wanna take the rest of the day off. Did it hurt some other stocks too? NVIDIA and AMD. Apple. Back at support. AMD. Mister's got a triple bottom. It's the only decent one I saw. SPY is negative 81 cents. So we hit a bottom on SPY too on that. Oh, look at that. That's perfect double bottom on the wick. Man, that sucked. We can go down a lot more here. I think it's time to clean house. I just don't feel good. We're bearish. I don't like that at all. That was cold. I mean, that sucker just in 1 second. Metal gas can. Might go shopping for a metal gas can. And just walked away for a bit. We got a flag. I remember I was talking earlier about that one flag. I said this is called a bear flag, but I didn't expect this knife. Okay, it's had enough time to shake it off, I think. To do it. The 7750s had a nice little bounce right there. This is what I think is going to happen. Trump's going to give them the money. They're going to promise they're not going to build a bomb. And then they're going to build a bomb, or they're going to buy one from Russia or China. Because these people are nuts. So are we. So is our country. I'm having a huge dilemma right now. I wanted to jump into that, but the last time we had a little head and shoulders that had that lower arch down didn't do too well. The bad thing is, man, I added on that frickin' crow. I mean, yeah. And then we got the 1 minute, which is a 63, and that used to be my exit idea. So if I jump in at the 20 here, it ain't gonna make any sense to do that. And then this is gonna jump up $100. The VIX dropped down pretty good and it's bouncing up. It's just now hitting the 9, I think. Yeah, 9 simple moving average. I'm gonna get my coffee. Then I'm gonna go buy a metal gas can. Trying to think if there's something else I had to do after 3. Oh, I forgot to go take a picture of that lawnmower. I'll do that. 3 white soldiers at the 200. We hit the 63. So we'll see if we can consolidate this here first soldier. We've got to break the 200 though, and we're back up there. The 770s are still at $1, so I still wouldn't have gained anything on that trade. Well, if it wants to reverse, it's going to do it here. I don't know. I ain't got the guts to push the trigger. The 7755s, I mean, I'm sick. My soul, my Savior gone to me. I'm back looking at the 7750s. See how hard that 63 is? And the 200. And I have them on the right time frames. Now, if I was going to scalp 7770. There's the triple bottom, back down to a double bottom, triple bottom counting the wick. Let's see if that happens. Set the alert right there. Oh, I got another thing I got to do. Might do that now. I'm sitting here waiting. Order me some more hollow socks. I better put that on a different. Damn. Yep, that's right. I hate to say it, but that's right. They're the one that killed their own protesters. What the hell are they talking about? Compensation for them slaughtering their own 50, maybe more than 50,000 protesters. if that's true, you don't know what to believe anymore. Oh, I don't want that. Oh, they're out of stock. Shit. Okay, we're coming back up again. This is starting to look clean. We're getting a crossover. We're at the 200. There's my 777,750 I called earlier for support. CGM, CGC. We're starting to be bullish here. And 770s are still at 110, 115 after all this. Looking pretty clean. I can't believe I got busted in that. That just ruined my day. Here we're coming back down again. Well, sheepskin. Yeah.
$400 here. So 1-to-4 risk reward ratio, pretty common setup traders often look for that reflects this would be more of a higher probability style of trade here, hoping on this consistent supportive area to hold firm here. Break even 109, 6.8% to the downside, expected move around 7.8% or so. So it is within that boundary here, but kind of this is just on the cusp of that lower end here.
She's got to have some mean calves on her body.
Break even, we can keep our credit and move on.
Yeah, and risk defined, of course, in a name that is still adding to its near 67% gain over the last 52 weeks or so. But appreciate it too.
AKAM.
Technical help as well as some ways to trade these names for example purposes. But up next, it's time for FOMO. We're diving into Super Micro ahead of its earnings tomorrow after closing bell.
Super Micro.
Shares now up about 2.3% on the day.
Earnings breakdowns and hot takes that teach you about stocks and markets. Follow me on X at N Pedalides and connect with me, Nicole Pedalides,
I think I will go get
on
that.
LinkedIn, Facebook, and Instagram.
We're at support right now
Schwab is powered
on
by
the /ES.
unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes? Or, I want to know how they discovered that hidden gem. That's exactly where Market Matters comes
No,
in.
it doesn't.
I'm Marley Caden, and our podcast is slowing things down.
It sure is.
Beyond the earnings
About
to get to the
1910.
heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you.
No, it doesn't.
Subscribe wherever you get your podcasts.
We got triple bottom on the /ES. Another squeeze.
Markets. Download the Schwab Network app and get live coverage wherever you are.
God. I feel vulnerable right now. Do you think 67765 calls are a quick scalp? Not yet. That depends on how long ago that was. No. I'd get closer to the money. 7.60s if I was to do it. But there's not no volume. The market's hesitant on that last jerk. Probably got the same feeling I got. Marley, ever since you started, you've really turned this shit around, haven't you? So one day hire Hunter Biden. Acting FDA commissioner on recent what? Foodborne illness breakouts? Are you kidding me? See, we've got, this is, for the chart, it looks, I mean, I'd take it here almost. But for the being in the now part, I don't know. That's a good question.
To your agency and the
Fat cats have been talking like they were pricing in cheaper oil into 27, but now they're kind of having second thoughts. Now we're under the 10, so I'm not going to take it. This would be a scalping spot. No, that was clean. Right off the 20 to the 200 for a scalp, for a 2-minute scalp. 1 minute, 2 minute. The 7750s pay better, but they're expensive. Apple down's almost 7%, 2%, 2.2%. VRTX up nice. Trade Desk down again. TTD. We got a double top. Had like $150 right there for that contract if I'd have got it. Yeah, 7770s are not doing nothing. They're too far out of the money. We filled the gap. Say SPX. Might take one of my personal account. August 10th. 7760s or the 50s. We're getting ready to squeeze either way. I just can't operate without any cleavage. How is AI reshaping the workforce? Well, that's a stupid question. It will educate you. You'll be more productive if you don't adapt to the new revolution. You will be left behind. You'll be doing service work. So we're coming down to the right shoulder on this inverse head and shoulders. We have a rising wedge. We could see 7758. $5 bounce. We're coming back to the 63 on the slash ES. Yeah, I got hurt hard on that trade. Slash ES has an ascending triangle. I mean, that looks halfway decent. Didn't hold. Didn't think it would. Saved myself again. There's no more solid supports. Except this one. This one. Trying to remember that old Asian chick. It's this one and this one. Triggered! There's your head and shoulders, and I'm going to jump in it. I'm going to take a risk. 3 black crows. Three black crows. Triggered. Come on. We're bearish now because we're under the 20. And we're under the 63. Apple had a nice little bounce back. We got a shoulder line right down here is what I'm waiting for. Triggered. SPX. What? Oh, I set the alert wrong. Or did I? Oh, I set it down there. No. I'm not feeling it yet. I kind of wanted to see if it would hit that shoulder line, but it didn't. And it did bounce off the 3 black crows. But I ain't taking it off the 1 minute. So I'm using the YouTuber that asked me a question. I put the /ES next to it. Where are you? Yeah, Rockstone. Kind of use that VWAP on the /ES chart. I use that when I'm trading the SPX. Here we got a head and shoulders. So that's kind of what I'm waiting for. We're bearish, we're under the 20, so I don't want to take the trade. And the 10's about to cross. So even if it hits this, I'm not sure I'd want to take it yet. If that makes any sense. After what happened here, there's a lot of people kind of got itchy finger not to trade. Now see, here we're coming down to that shoulder line. Now on a good day, I'd take this trade in a heartbeat. In a heartbeat. If I might just do it. Just one. The 75.50s. Let's see where we are here. $75.50s. Oh, already down. Right now. $75.50s at 5:30. Did I get to? Yeah. Come on. Burp. It's a bearish day. Very slow. No bullishness at all. Companies are growing revenue. I keep reading that headline. I'm just sitting here like a there's no, I don't see nothing on that. Microsoft is at the 200 and Amazon. We got some inverted hammers. It's almost 1 o'clock. More drama. We do have kind of a, I don't know, I'm going to call it a fallen wedge. We've got a snake. Malfunction snake. and break it. I'm gonna put that right there. Come on, give me $100. Just stick it out there. Over here on the /ES, we're at the 63. So that's kind of like a, if we break that, I think we can easily jump up to this resistance. If not, exit. People ain't emailed me back yet. Ah, come on. Break it. Falling wedge, breakout, inverted hammer, touch. Somebody saying something in the room. Microsoft looking weak, he says. SpaceX bounced up off the 50 on the 1 minute. Well, there's the breakout. Falling wedge breakout, pulled back. Still looking good. Down $50. None of them held. Damn. Microsoft looking weak, huh? Yesterday's high right here. Whoop. What did I do? Yeah, this is hard resistance. I'm down $40. Blanket. God, I'm in the green for a split second. What am I going to do? Panic attack. James, you could sell and break even. You're at resistance. Break the 63 on the /ES. Do it now. Do it now. Finally. Fuck. Thank you, Lord. Thank you so much. I needed that. Just that little boost. Just that little encouragement. That's all I wanted. You did it for me. I'm out. I said very good. Oh yeah. Oh yeah. I had to work. Stoned. My eyes have seen the glory of the coming of the Lord. He is romping out the vintages where the grapes were rather stored. He's got a long ways to go, and he never gives up. 5:30 to 6:35. His truth is marching on. Glory, glory, hallelujah. Yeah. There's Wolfman Jack coming from you from the bowels of Sire. IWM. Look at this here. Oh, big pop. Okay. That's nice. I like how I traded that. Falling wedge, pull back, entry, boom. I was a little nervous. I'd done $100. And I didn't add. I should have added one. I would have got 200 out of it. Maybe 3. Now 200. And now notice that the 10 is touching. I got to figure out about the 200, how to trade that. If that means we're bearish or if we're more bullish if we're under it. But it's rising up. I'm tempting to get another one. Not right now, but he's not completely bullish. And for me to keep it longer than that, I think that was a pretty good go. Now it's coming back. We got a head and shoulders right here. So I'm getting ready to jump in this. We're under the 63. No jump. Wait a minute. This is my VWAP chart, if anybody's curious. And we'll watch that tape, see how that registers. Now, right now is a solid support. And we got this head and shoulders. Watch this. Grab one. I got one. 77.50s at 470. He said 470. How did I get that line on there? That's the shoulder line right there. Shit. $470, we're at $460. I'm still looking good. I must have got a deal on that. Do I got the right one? Yeah. Doesn't seem right. Five minutes of selling. Two engulfing candles with a tweezer bottom. I might go long here on mine. I mean, my account, my real one. Now see the 10's crossed the 20 here, so if we can break past that, we might get her back up there. But we're still being in the now, you know, it's it's one of them days. Where you don't really want to be trading bearish. Bullish. Bullish. Squeeze in between the 20 and the 10. Oh, SpaceX did bounce up good. Or did it? No. Wow, I was looking at the wrong time on that. That's not good. Shit. Just like that. We're hitting that shoulder the right time, the second time. This would be where I'd take my trade if I was on a good day. Definitely the right shoulder. The second time, but it's not a good day today. This is definitely where I'd take it. I mean, on my old way, and we're still kind of bullish in the new way, but we're still under the 20, but we have the 10 crossing the 20, so that's kind of bullish. Let's have a breakout. Watching the tape on /ES. Snake breakout, pullback, boom, higher low, in second shoulder on that inverse head and shoulders. But very bearish day. Might get into my personal account here pretty soon. Same ones. Microsoft still hovering at that one support level. /ES is at the orb. Very beery. Damn, man, come on. It's like watching paint dry the way this market's moving today. In the 1 minute it says bearish. Two minutes says I still have a chance. and 77.50s in my personal account here pretty soon. Oh. That's it. Not my personal. Put some hand lotion. My hands are not feeling good. Stock edge back from record as major indices turn lower. Two hours ago, stocks hovered near record highs. The 1 minute, I might just go back to the 1 minute. It just reads a lot cleaner. And we got kind of a wedge here on the 2 minute. Well, we've got two fallen wedges, one bounced. We just broke out of the other. I like that hammer. And see if it means anything on the 2 minute. Dang wind. Where in the frick is it? There it is. Come on, break it. Jesus Christ. Personal account, here she comes. Man, I tell you. 3 white soldiers. We're trying to break to 63 on the 1 minute. Here we had another frickin' resistance right here. And down 10%, 5%, just like that. If this breaks, I'll be green, where I sell them now at a small loss. We're definitely at a resistance. All of a sudden, there's peace in the Middle East for the 9th time. They're giving in. What the hell's going on outside? Okay, I'm back to almost even here. I got to debate if I want to sell these fuckers. And then I get a big old engulfing candle to 77.54.16. What would you do right now if you were green? Would you sell them? You're up 10%. You're up 12%. You know what I'm going to do? I'm going to sell them. I'm out. I'm out. How'd you do it? Luck. 470, that's 435 out at 5. Okay. Okie dokie, he gave me a gift. Sell half and let the other ride? No, I got out. Not today. Not today. Not today. No crying. Okay. Just for that. Just for that. Sometimes I'm not a badass. I get weak at my knees. Sometimes I just can't stand up straight. I know I'll make the pearly gate. Some say that don't sound too great. My name is Jim Howard, but I'm a coward. I try to do my best. Sometimes my days I just need to rest. I've been staring at these 2 aspirins on my table, but I haven't took them yet. I know I'm able. Sometimes I'm a coward. My name's James Howard. I'm a coward. I act like I got the biggest balls, but that's not too true. The older I get, the more limp I get. That's not helping my confidence. That ain't helping my confidence. For I'm the sneaky snake trader. I stuck around 'cause I want to fight this fire. Just take some time and unwind. Oh, there she goes. I'm up $300 in one of my accounts. I'm fighting back. I'm fighting back. I dated this girl named Marcia. She looked like Marcia Brady. I called her Katie. I snuck her in a drive-in in the trunk. Went and seen Warriors. Went and seen Warriors. I'm gonna take this trade again. I'm getting up my confidence. Something that I win. Build up my confidence. Did you like it? How does that sound on the mic, folks, in the room? Is that kind of loud and glittery? Or does it sound clear? Did that last song sound clear, room? I'm talking to you. Yes, it did, Jim. We play again. We love your music. Bastards are ignoring me. Now this is the most respectful that we've had so far. What did I sell them suckers at? $5. That's where we are right now. So I'm going to put my order in. We're bullish on a normal day. But man, I got stuck in that big knife and that killed me. $1,600. That sucked. That's like in a split second. There's nothing you can do about it. Except cry about it. Yeah, there'd been a couple other $100. Shit. Bring it, boom. It's clear, good. That's all right. We're back down real fast right there at my exit. I can get back in it right here. If you do you still have confidence in it, Randy? Yes or no? Well, there's $70 on that little baby candle. $5 to set $5.70. I received a reward from Temu, and I've never ordered from them before. Okay, we're at the 200 on the view on the slash ES. La 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 la. 2 minutes, sorry. Now apologize. Two minutes, 77:56:36. Damn it. $5. So we do know that the 200 is a pivot point. It's a very major resistance level, and you're right, Randy. Randy is right. I'm going to take 2 aspirin and call a doctor. And I still ain't put no cologne on or nothing. I smell like Nikki. Joking, Nikki. That was a joke. I know you probably smell very good. I just smell like poo-poo. Would anybody pay me $500 to if I put deodorant on my underarms live on YouTube? How dare them people ignore me? Do you see what I see? We're still riding the 50 SMA, or the 9 EMA, I mean, on the /ES. Did I put that thing in the room that I had? Yeah. Trump speaking? Oh my God. 777889 resistance to break. Now that's a good, another wedge breakout. Oh shit. Now I'm crying. That's another $400. Didn't I have one or two on that last order? I think I had two. Yep. Randy was right. Again. I'm going to buy a put. We're so close to the VWAP. Oh, I didn't. I bought a call, you idiot. Fuck. Dumbass. Where are you? Okay. What did I get it at? 360. Damn it. I don't know what I did there. I thought I bought it. Let me see what I did buy. I might have did get a frickin' put. Yes, I did. I had a put. Damn it. I sold it for $20. What was I thinking? Oh, I had it on the... Oh, okay, I got it. No. No. What'd I do? 70, what'd I sell it at? Okay, I got in at 360 and sold it at 380. Oh, I'm okay. Yeah. I did it right. I think I sold at 384. Big $20 bill. That was my first put I think I bought in this platform. Big $20. I was put the plus side of it. Yeah. I'm just going to go step outside just for a second. Clear, because I don't want to buy the put. The 7750s are at 720 now. I didn't think about that dip and getting a call because we're so close to the 200. There's the 9. My soul. Well, she dropped all of a sudden right there. What puts did I have? I had the, where are we? I had 77.55 put. Now they're trying to keep it up. It's 2:06. Keep an eye on the watch. Oh, I got to pay my phone bill today. I better throw this pin out. Don't seem like a good rider. We got a triple top at the 200. Rindy on the 2 minute. It broke, but the triple top broke. We're getting the VWAP on /ES. Thing's a trip. I'm squeezing right now. All of a sudden we become very bullish. It's 214, 314. Are we going to break the VWAP and have a bounce, or is it going to give up and go poo-poo? This is the spot. Nope, triggered. That don't sound like one of my alerts. CGC, where in the hell is that thing? Where the... I don't like to wait. I liked it so much I had it again. Drip, drip, drip. This is support. The 77.55 put. Not in it. Oh, ouch. We're breaking the VWAP. Breaking the VWAP. Not good enough. What time is it? 2:18. No. I'm not going to take too much risk. Yeah, which way are we going to go here? Room. Up or down? I'm my soul in heaven, let it rise. We're now below the 20, and I cannot buy it here because we're in the squeeze. Has anybody ever seen Pat Benatar? I did, twice. It is now 2:33. I just missed it. Yeah, that's it. Three of them. There, we come back down now. Look at that comeback. Nice. $3 to 380. 285 to 380. Huh. Yeah. Now it's 225. We're at the 63 here on the slash ES, coming down on the 200. Coming down on the 200 right now. 7777.00. I'm not even sure on a normal day I'd take this trade. We're right at the 200. I mean, on a day like today, I wouldn't. Normal day, I would. The 77.55's at $2. 195. One more red candle, please. One more red candle. There's a spinning top. 2 minute. Let's look at the one. So I might jump some here. Oh, the 1 minute's right at the 200. It's a good spot. No. 77.55s at 145, 130. And them puts would have been a nice trits. It's due now 333. Man, we're definitely bearish. Two-minute don't look too good at all. A little hope on the 1 minute. I'm not sure we'll get anything out of this, but not the way the day's been. We're above the 9 and the 21 on the 1 minute. On Microsoft, oops, that's not what I want to look at. We're definitely under them. You got a symmetrical flag. We're at the 200 on the one. So that's kind of like a resistance. And I don't think it's going to go. If it does, I'm Chairman Warsh promises 2% inflation. It's a pretty heavy promise. I won't be promising that shit. Not while we're in a war. But skyrocketing U.S. debt makes it a pipe dream. That's true. That's what I was saying, thinking. We're above the 200 now. And we're at the 63 on /ES. So it's kind of three white soldiers. Not sure it's going to break the 20. So exit. There we go. Boom. Thank you, Lord. I'm out. I'm out of personal and business. Now what's it at? 260. Shit. 260. Oh. That again. Well. Okay. 260. Jeez. At least I wasn't red. I ain't gonna trade no more. Kind of pisses me off. I got it at 185 and sold at 195. Then went to 260. I had 3 soldiers plus. I figured that was plenty. I should have added, God darn it, 125, 115. That'd have been a killer trade. It's been a hard day. $1,600 loss on my challenge. I got stuck in that knife. There's nothing I could do about it. I kind of felt something wasn't feeling good. I should have thought about it before I jumped back in it. It was like I had a precursor. Second aspirin. Looks like your kids are very happy. I'm proud of you, my man. Now we got a crossover, and we only got 15 minutes left, so really time to fold it up. First day in your challenge? All right. Very good job. I got stuck in the knife. I'm glad it wasn't by account. I'd really be shitting britches. Now we're back to the 200. Could take this trade right here. It's on the 1 minute. Dang it. There it goes. 135 to 165. 2-minute rule coming up. I mean, the 10-minute rule coming up. See what happens in less than 2 minutes. You sucker. Don't do it before it. Oh. Man, I screwed that up, man. I was going to wait right... Oh, it was a minute early. Dadgum. That'd been $70 a contract. That's shit. I was ready to get it. We're at the 200. I just wanted 1 minute. Here's the 10-minute mark right there. It is. Just like that. That was funny. Not too funny, but Triggered. How sweet thou art. Should I dare? No. That was a funny looking candle, how it jumped up like that. Less than 3 minutes. Bum, 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 bum. Ding, ding, ding. Right at the end of the day, there she goes. Well, today was not one of my best days. That's for sure. I was way out of it. Way out of it. Green on my personal account, but red in my challenge. So I'm going to get out of here. I got a couple things I got to do. We'll get back at it again tomorrow. It's not one of my best days. I was really dialed in today. They want 720 by the end of the day. All right. We'll catch you later, YouTubers.